And that's the European story. We followed the US yesterday. Today, yields go a little bit higher, but a lot of that has to do with what we've heard out of Germany on the inflation side. North Rhine-Westphalia, the first state out with its inflation data print, and that looked a little bit hotter than anticipated. The euro at 108.69, just putting that in as we wait for the German national data, waiting for the Spanish national data to come at the top of this next hour, and also waiting for the Eurozone aggregate in terms of inflation. That comes tomorrow. So we're just looking at futures then. They are flat to positive for European stocks, so waiting to see what that does to markets. So expecting to see a little bit of upside at the start of trade. But as I was mentioning a few minutes ago, US futures actually turning a little and just dipping below the flat line. So perhaps we have exhausted the rally of yesterday. Certainly we saw a strong rally through the European session yesterday and into the US session, of course, driven really by that data, the weakness in the data in terms of the jobs market, the job openings, and also consumer confidence. So we are seeing the FTSE 100 then, as expected, looking a little bit more positive, up by 0.4%. The French and the German markets both opening in positive territory as well. We keep an eye on the pound, unmoved really, down 0.1%, 108.60, sorry, on the euro, 108.70. And I mentioned that because we've got that Spanish CPI print, the preliminary August CPI rising by 2.4% year on year. Now that is exactly in line with estimates of an increase of 2.4%. But two things on this. Spain was not the source of the inflation issues to start with across the Eurozone. Their readings have all been pretty moderate compared to other areas. This does mark something of an uptick in inflation, though, because it was 2.1% at the last reading, now coming in at 2.4%. And that's the theme of the morning. We've seen those bond yields going higher in Europe. You can see that here with the Spanish, the Italian, the German, all of these yields going higher, selling of bonds as a result, perhaps, of a slight hot print on the North Rhine-Westphalia inflation number out of that particular state in Germany. We'll wait for that state-by-state picture to build as we go through the trading day. So that's what we see across equities. We're seeing buying, sovereign bonds we're seeing selling, a mixed picture on currencies. European currencies a little weaker against the US dollar. Let's have a look at the sector breakdown then, see if this tells us anything interesting about where we are. Travel and leisure is pretty flat. A few sectors in negative territory. Utilities amongst them. That tells a pretty risk-on story, doesn't it, when we're seeing utilities moving to the downside. And banks, one of the better performing sectors. Also basic resources up by 0.9%. Does this tell us something about optimism around China? Let's dive deeper into some of the market themes this morning. Sophia Horta-Acosta joins us once again from the Markets Today blog. And let's start with the European data picture then, Sophia. I mean, it does seem, I'm linking the North Rhine-Westphalia hot data and the uptick, as expected, in the Spanish CPI with what we're seeing in bond markets today, the uptick in sovereign bond yields. It's partly a global story, but maybe also driven by the European data. What did you make of the European data picture so far?
I think markets are incredibly sensitive to any deviations from estimates. We saw that German data, but also watch the Spanish core CPI. I'm just looking here on my screen. The actual figure was 6.1% and the survey was 6.0. So a little bit stronger than expected. Markets are clearly reading this as, you know, the inflationary pressures are still very high, really setting up for an interesting ECB decision in September. Let's not forget that the ECB is first out of the gate with the central bank decisions next month. But really, this shows that the ECB won't be done with its battle against inflation. Markets are, that's the read right now. We do get, of course, a lot more data before then, but you know, the sense that the implied probability of another rate hike in September is rising, because if the ECB skips that hike, goes for a pause, will it then have time and room to hike again, given the data that we've seen showing weakness in the economy in Germany and Spain as well?
Okay, so that's the latest on the European data picture. And Sophia, if we could pivot to thinking about China, I was mentioning that there was perhaps this risk-on theme coming through this morning, where there was a suggestion that mortgage interest was being reduced, and you mentioned how that could be significant. But actually looking, I was talking about how this was a sort of positive driver for Asia, and we do see MSCI Asia Pacific up by 0.4%, but China's not driving that, is it? I wonder where we are on the China themes this morning.
So this is not the big bazooka that people have said is needed to really revive or reverse the confidence crisis in China. It is a step in the right direction. This is what China needs to fix, because the problem is related to consumption. It's related to household confidence, and both of these would go some way towards targeting that. The problem is, would that actually translate into growth? And that's where we see markets really kind of getting excited about these measures to start with, and then really kind of digesting them and thinking, hey, this is not going to change the picture on the economy broadly, because the structural challenges are still there. I do think there's still a policy window for the Politburo after the Politburo meeting for authorities to roll out more measures. But again, the risk of disappointment is high, because the market is looking for something that Beijing probably can't deliver.
Yeah, so no sign of that bazooka yet. And you mentioned last hour to us, so we're still waiting for the numbers out of the developer country Garden, so we'll keep an eye on that. As you said, it's having trouble, struggling to pay one of its creditors, and serves second and third tier cities, was the sort of briefing you gave us last time. I want to get your thoughts, though, on mortgages and the UK housing market, because as we sit here with the start of the European trading day, and I see UK yields going higher once again. They're in good company. That's the sort of European theme this morning. But a lot of tension in the UK housing market right now. We've had some recent indicators, and we wait for more in the shape of those mortgage approvals.
Exactly. So sales transactions are collapsing. We know that. We got more data today suggesting that the read across to prices hasn't been quite so strong, because there's still a kind of a supply-demand dynamics that are favorable to prices. So is the UK housing market as resilient as this data shows? And can prices really hold up when you have sales and transactions collapsing? I think that's the question. Mortgage approvals, the last report that we got was a lot stronger than expected. So I would be interested in whether we get softer numbers today. The expectation is for mortgage approvals to fall, but still resilience is the kind of the key theme running through the UK housing market. And how long can this actually last, Anna, if the BOE keeps hiking interest rates?
Yeah, Sophia, thank you very much. Sophia Horta-Acosta from our Markets Today blog. Thanks to Sophia for her time this morning. And you can keep across the blog, go to the Bloomberg UK website, click through to it from there, or go to TLIV Go on the Bloomberg terminal. Let's get to check on some of the individual stocks that are on the move. Joe Easton rejoins us with a briefing. Joe.
So, as expected, it's a messy day in European renewable stocks. Ørsted falling around 13% over in Copenhagen as they announce a $2 billion impairment on their US business related to supply chain issues, and also some tax and interest rate worries as well. And we're seeing that feed through into both Siemens Energy and Vestas. And it's worth bearing in mind that those stocks have already fallen a lot this year, given their own profit warnings related to the same issues. So we can see that sector really not having a good year at all. We're also going to flip over to another big mover in Denmark as well. This is Coloplast. Now, this is a medical technology company announcing after the close yesterday that they are raising funds at a discount to the closing price to do a takeover of a skincare company that they recently announced they would buy, and that stock heading lower, nowhere near as much as the other stock on that index, Ørsted, but still a pretty big move for that one. In terms of the other stocks on stocks to watch, both going higher. So Prudential, strong returns in their Hong Kong insurance business, better than analysts expected, according to Jefferies in a note this morning. And Bruno Cucinelli benefiting from all those quiet, luxurious cashmere sweaters, up 5%. They're seeing a 50% jump in operating profit and rising over in Italy. Then in terms of the ratings changes, an interesting one out today. We've got a downgrade for Heineken over at RBC. Yesterday, that stock was upgraded at JP Morgan, but RBC today saying that Heineken's premium brands are falling behind the big rivals. So this is beers like Sol and also Amstel as well, which are owned by Heineken, not performing well according to RBC. And we've also got Kingfisher, the owner of B&Q DIY. They go on a negative catalyst watch over at JP Morgan, who says DIY trends are moving lower in the UK. People cutting back on doing up their houses, according to JP Morgan, who's watching that one ahead of earnings due in around 1 month's time. And then Total Energy is pretty much unchanged, but they've got a neutral rating over at Citi, reinstated, but that is actually technically a downgrade because Citi was previously a buyer of the stock. They're moving to neutral, but not too much of a reaction there. That broker move was mostly due to the changes in oil prices, so they've adjusted their estimates. Total over in France up around 0.2%. And finally, Frankfurt Airport gets an upgrade. This is over at SocGen. They give it a €65 price target. You can see it trading at €50 at the moment. They say some of the holidays from Frankfurt in places like Greece are actually trending above pre-pandemic levels, and that's an indication that you should be buying into that trend and buying shares of Frankfurt Airport. So that one rising around 2.5% over in Germany.
Okay, Joe, thanks very much. Joe Easton from our equities team with the latest on, really interesting moves in the renewable space then this morning. And other stocks. Here's what we're looking out for then today at 9:30 a.m. We will get the UK mortgage approvals data. We were just discussing that with Sophia. Bloomberg Economics sees the number coming in at 52,000 versus the prior 54.7,000. Then at 1 p.m., German CPI data comes out, which is expected to decline slightly. Half an hour later, we'll get the US GDP data, and at 3 p.m., US pending home sales will hit the Bloomberg terminal. So plenty of data to focus on. We've had a slightly hawkish start to the day when it comes to the CPI core print coming out of Spain and the North Rhine-Westphalia state print coming out of Germany. So that seems to be moving bond markets, and we are seeing those yields were on the rise in the early part of the European trading day. Coming up on the program, US job openings then fall more than expected, prompting speculation the Fed is nearing the end of its tightening campaign. More on that next. This is Bloomberg.
So Fabian, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
Your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
From New York City,
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
have a great evening.
here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
All eyes are on the U.S. jobs report.
We're still seeing some lingering effects of the pandemic on the jobs market.
There has been a shift to labor, and it doesn't seem to be diminishing.
This labor market is still tight.
This Friday, the surveillance team brings you the crucial jobs data and expert analysis at terminal speed.
Are we beyond COVID?
We are on that path to get to lower inflation by the end of the year.
But then you look at the unemployment rate, you're looking at a problem for the Fed.
The August jobs report, Friday on Bloomberg Television and Radio.
This is Markets Today. We are 13 minutes into our European trading day, and we see most of these markets in Europe flat to positive. The FTSE 100 getting some slightly better gains. Basic Resources playing well there. Elsewhere, actually pretty flat, and US futures flat to negative this morning, down almost 0.1% on NASDAQ futures. We keep that in mind as we think about where the US yield story goes. So US yields plunged yesterday, uptick today, but plunged yesterday, and stocks edged higher after softer data pointed to a potential Fed pause. US job openings fell to the lowest since March 2021, while consumer confidence slid by the most in 2 years. Both of those data points coming in below market expectations. Anika Gupta joins us, Director of Macroeconomic Research at Wisdom Tree. Anika, thank you so much for your time. And clearly you were poring over the detail, I'm sure, of that macro data deluge that we got yesterday in terms of the JOLTS numbers and the consumer confidence, both looking weak. I wondered, has this changed your view, consolidated your view around peak Fed rates in the United States?
Very good morning, Anna. For now, I think the JOLTS number, the weakness that we saw in the JOLTS number, is coming off a much stronger data print that we got in the prior month. So I would not look into one single data point as, changing that narrative of the U.S. economy remaining fairly resilient, as we progress into year end. I think the other factor of consumer confidence, yes, I think, rates have moved higher. Credit is tightening, and the U.S. consumer is going to feel it, especially when you're seeing, mortgage rates hit such high levels. But at the end of the day, I think, two factors that one key factor that the investor that we discounted was the strong fiscal impulse. And that continues to provide momentum for the U.S. economy. So we still believe that the recession calls, do need to be dumbed down for now, because the U.S. economy still seems on a very strong footing.
Okay, that's interesting. We spoke to a guest last hour from Schroders, Anika, who was saying they think we are in a soft landing in the US right now. That's where we are at this point. But they do see cracks emerging next year. And I suppose the bond market points us towards that to some degree. Do you share that sort of time horizon? So even if you're convinced by the resilient economy towards the year end, Anika, do you expect to slow down next year?
Yeah, the U.S. is likely to face a slowdown. We're seeing globally the Eurozone as well as China face a much slower economy, and hence that is likely to impact the U.S. But if you look within the U.S., I think we've seen a lot of resilience. Even if you consider, right, as of now, we're looking at the Fed GDP, the Fed Atlanta GDP tracker, looking at more than 5% quarter-on-quarter growth for the U.S. economy. We don't expect it to be as high as that, but we definitely are looking at a range of 3.5% to 4%. Now, moving into 2024, if given our narrative of rates being higher for longer and inflation surprises continue to haunt the market, that is likely to bring about a slowdown for the U.S. economy.
Okay, so we will see a slowdown next year. I wonder where you see the trajectory of relative interest rates, because we see bond markets in Europe today retracing to a large degree the moves we saw yesterday. So yields quite a bit higher this morning here in Europe. Yields higher in the US, but not retracing all the moves of yesterday. Do you think that the ECB is going to be hiking for longer than the Fed, despite the weakness in the Eurozone economy?
Well, the ECB is definitely caught in a hard place, and that's becoming more evident today, where we've got these surprises in inflation in Spain as well as Germany. But at the end of the day, economic growth is pacing a lot slower in the Eurozone when you compare to the US, and hence the ECB's caught in a tough place where they need to balance out slowing growth with inflation still hovering in a much higher level. I think they can acknowledge that President Lagarde even did that. She did acknowledge they have come a long way in trying to tame inflation, but there's always a likelihood of further data surprises. But I think as economic growth slows, that should also filter into inflation coming down from these exorbitantly high levels.
Okay, so maybe we get a soft landing in the Eurozone. I mean, I know some economies have been in recession already, so maybe that's not possible. But how would you describe the landing that the Eurozone should expect?
Well, with Germany facing such weak economic data points and Germany accounting for most part of Eurozone's GDP, I think the Eurozone is facing a much harder economic growth trajectory. I think what Germany is likely to do is they're going to take this in their stride. They're going to make a lot of changes, within their economy in trying to bring about a turnaround. But for now, given the fact that their economy is so reliant on manufacturing, and manufacturing is what is taking a hit globally, they are likely to suffer, and that's going to be a deeper downturn compared to the rest of the globe.
Annika, let me tap into your knowledge of the commodities market. I know for many years that was your sort of specialty. I'm looking at oil prices, 85, 88, so up a touch this morning on the Brent price. I was looking at two pieces of research this morning that suggested higher prices. One was that the Saudi Arabian leadership might decide to double down on their cuts to production, extend those cuts to production. Another suggesting that stockpile data later might also suggest that prices can go higher. What are you seeing in terms of the drivers of oil prices?
Well, the market is being kept artificially tight. And finally, the global markets are taking OPEC seriously. So as long as they keep that hold on the market and supply remains tight and growth remains fairly resilient, that's just going to transpire into much higher oil prices. So I would definitely agree with that view, and that's one of the key reasons why we expect inflation to remain higher for longer, given the fact that even in the agricultural space we have the looming El Nino phenomenon, which could result in tightness in supply. In the energy markets, we're already seeing tight supply for oil, and that remains front and center in terms of bringing out these inflation surprises going forward.
Thanks so much, Annika. Thanks for your time. Annika Gupta joining us this morning, Director of Macroeconomic Research at WisdomTree. Coming up on the program, a big win for the crypto sector sends Bitcoin surging. More on the grayscale SEC ruling next. This is Bloomberg.
CIO Dawn Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman Sisters rather than Lehman Brothers, the world might well look a lot different today.
Bloomberg UK, your your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. The markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Bloomberg Markets today. 23 minutes into the European trading day. We're unchanged on the European stock markets overall. We see a little bit of movement downside on the German market. Elsewhere, a little bit of move higher. The FTSE 100 getting the best of the gains this morning. Now, Grayscale has won a key legal fight in its push to launch a Bitcoin ETF. Bloomberg's Kaylee Lyons breaks down how this impacts the crypto world.
Grayscale has moved closer to launching a spot-based Bitcoin ETF in the U.S. in what is potentially a watershed moment for the crypto industry. A D.C. Circuit Court handing them a victory when a 3-judge appellate panel overturned a decision by the SEC to block the ETF. They said in the ruling, this is a quote, "The denial of Grayscale's proposal was arbitrary and capricious because the commission failed to explain its different treatment of similar products. In the absence of a coherent explanation, this unlike regulatory treatment of products is unlawful." Basically, they're poking a hole in the SEC's argument that a futures Bitcoin ETF, which already has been approved in the U.S., should be treated differently than a spot-based product. That is something the SEC has said because of fraud and manipulation, and yet it doesn't seem that this court is buying that argument. Now, this is not to say that GBTC, the Grayscale Bitcoin Trust, is going to convert into a spot ETF tomorrow, but it is still a big moment in that direction. This now goes back to the SEC, and they do have some recourse here. The SEC, through a spokesperson, said in a statement to Bloomberg, "We are reviewing the court's decision to determine next steps," and they still could fight this. They could ask the full D.C. Circuit Court for a review. They have to do that within the next 45 days, though our litigation analyst here at Bloomberg Intelligence, Elliot Stein, has said he doesn't think that would yield any kind of different result. There is also the ongoing question about what this means for other spot Bitcoin ETF applications that have been filed. None have ever been approved in the U.S. to this point, but we have seen a wave of them recently from the likes of BlackRock, WisdomTree, Valkyrie, and others. And it's a question how this ruling in the D.C. Circuit Court on Tuesday makes a difference, ultimately, in the spot ETF race here in the U.S. In New York, Kaylee Lyons, Bloomberg News.
Now, don't miss our interview coming up later today on this very subject. The CEO of Grayscale, no less, Michael Sonnenschein, joins the Bloomberg TV team, 3:45 London time, 10:45 New York time. So if you're interested in that specific ruling, if you're interested in the Bitcoin, the crypto universe, then no doubt an interview you want to tune in for. Not perhaps the end of the story when it comes to Grayscale and its plans for this ETF, but certainly an interesting dynamic and one that reverses the recent direction of travel in terms of regulation. Quick check on Bitcoin. And we had seen this big jump yesterday in prices. We're at 27,442 right now. A little bit of a move lower in today's session, but we did see that jump during yesterday's session up to that sort of 27,000 handle. This is far away from the above 60,000 level that we knew and loved back in 2021, but certainly a story and a development we are keeping our eyes on when it comes to regulation of the crypto space. Coming up, the case for raising rates. Watch for inflation data out of Germany later today after early signs of sticky consumer prices in Europe. We had that North Rhine-Westphalia data. We've also had some Spanish core CPI, which came in a little hotter than expected. So lots to talk about when it comes to Eurozone inflation. This is Bloomberg.
not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee
The
Langs.
door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
That really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. It's not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure. With two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers
Right.
that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
Slice through the noise.
Forget the noise. Ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point,
What is the lesson or the observation?
This is Bloomberg. This is Markets Today. We're 30 minutes into the European trading day. Here are your top headlines. Room for pause. The latest US jobs and consumer data offer support for investors speculating the Fed is nearing the end of its tightening campaign. Bloomberg reports China's biggest banks are preparing to cut interest rates on existing mortgages and deposits in Beijing's latest measures to shore up growth. Plus, the ECB's job may not be done. Watch for inflation data out of Germany later today after early signs of sticky inflation in Europe. Welcome back to the program, everybody. So 30 minutes into a European trading day that gives us this, a flat session for Europe. We had expected perhaps a little bit more green on the screen this morning. We do get some green. That comes from the FTSE 100. So the FTSE 100 is up by around 0.5%. The CAC 40, though, and the Xetra DAX underperforming a little. In terms of the drivers of that, I mean, we ran away yesterday with the US data, didn't we? We got excited about the weakness in the data and what that means for the Fed hiking cycle. So that pushed stocks higher in Europe. It certainly pushed stocks higher in the US session and into Asia. Now US futures are a little weaker, down 0.1% on E-minis. NASDAQ futures down 0.1 as well. And if we look at the sector breakdown, basic resources, the best performing sector, along with banks, that's a sort of London positive sector picture, if you like. Utilities, technology, travel and leisure, those are sectors that bring up the rear. But around 2/3 of sectors are in positive territory, which is interesting considering the overall market is pretty flat. Now let's get an update on the individual stocks in focus this morning. Joe Easton has a rundown for us. Joe.
So one sector firmly in the red is utilities. You mentioned briefly then, this all being driven by Ørsted. I just wanted to reiterate the effect that this is having. We're seeing a number of firms, around 20 utility stocks, declining. RWE over in Germany, EDP in Portugal, and Iberdrola over in Spain are a couple that I brought up here. But Ørsted down 15%, and I've just read Exane BNP Paribas note. They say that the investment case in this stock will be compromised for some time, given this $2 billion impairment that the company has announced on their US business. And those stocks, as I said earlier, were already down quite a lot heading into this, and it's looking like a very negative day. Vestas over in Denmark, another one dropping as well, and we might see some other stocks ticking down as well as the day progresses. We're going to have a look at a couple of other stocks declining. Now this is in the food delivery space. We had Delivery Hero reporting earnings before the open today. They only actually reported their preliminary results around a month ago, so this was expected to be a non-event, but the latest results have shown a further decline in US sales, so the US cutting back on their takeaway deliveries, and we're seeing that one declining around 3%. It's also hitting the UK and Dutch-listed company Just Eat Takeaway down 1%. Deliveroo holding up. They don't have as big a US exposure, but again, in the negative, so another sector that is declining today. In terms of the gainers, a pretty UK-focused look. Firstly, in the insurance market, we've got Prudential and also Direct Line, both gaining. Prudential, we had in stocks to watch, strong Hong Kong earnings for that firm, mostly Asia-focused. That surprised analysts, given there are competitive pressures there, but they do seem to be holding on to their market share. And then Direct Line this morning announcing a new CEO coming over from Aviva to take that job. So that is something that's hung on that stock for a while. The former CEO did stand down around 6 months ago alongside the firm scrapping its dividend, so perhaps a change in strategy there. And then Instem, a shout out for them. This is a small firm that does pharmaceutical technology, so IT for pharmaceutical stocks, listed on AIM, based up in sunny Stoke-on-Trent, up in the Midlands, and that one gaining 39%. Finally, at the top, bringing up Bruno Cucinelli, on track for its best gain in around a year, up 6% in Italy, given the strength in some of their cashmere sweater sales.
OK, from Stoke-on-Trent back to the cashmere. Jay, thanks very much. Joe Easton from our equities team with a comprehensive roundup of the big moves on markets this morning. And now it's been a big week in terms of European data, and it's going to get bigger with the early signs of hotter than expected inflation from Germany and from Spain, potentially sealing the deal on another hike from the ECB. Is it too early to say that? Let's see. Our Europe correspondent Maria Tadeo joins us now from Brussels. Maria, let's start with Spain then. Inflation quickening, that was expected, and Spain hasn't been the driver of the big inflation push across the Eurozone more broadly. But what does the Spanish number, and I know the core was a bit hot, what does that all mean for the ECB?
Yes, Anna, and look, when you look at the Spanish inflation numbers that we just had, came in at 2.4% in August on a year-on-year harmonized basis. It was in line with the expectations and the estimate for the month, but we should also put it in context in terms of the timeline. And actually, we do see an uptick from the previous month, where inflation came in at 2.1% for Spain. We should also note that the Spanish Statistics Office, the INE, that puts out the release in question, they say that some of this was driven by higher fuel prices. That is the explanation that they give to some extent. Now, when it comes to Core 2, there is a slight decline from the previous month, but compared to the estimate, a moderate increase, which again would show, perhaps, or could show that this continuous decline in core inflation that the European Central Bank wants to see as proof that monetary policy is now really penetrating the economy on a sustainable basis. Well, perhaps it needs more time to show that that is definitive. That's what they want to see in terms of monetary policy. And look, we're looking at every CPI from every country, of course, in anticipation to the euro area number, mostly in the context of that decision of the European Central Bank. They have said they will be very much data-driven, that every data point will matter. If you look at the Spanish number today, what it points is that there is an acceleration for the month, with all the caveats, of course, that I explained. There's also the government side to this. Remember, the Spanish government had been very vocal about the idea that inflation was now hovering around 2%. They said that this was almost a victory lap for the government policy. What we see now is that for the month, it actually uptick and it moves away from that 2%, which again, they had celebrated, saying they had accomplished something that peers had not been able to do over the same period of time. So again, there's the ECB story, but also the political story that features too in the country, beyond the football, of course.
Beyond the football, plenty to say about football on another occasion, I'm sure. We also got inflation from the key state in Germany, North Rhine-Westphalia. What do you think that tells us? How does that add into the broader picture as we wait to get clarification on that later today?
Yes, and of course, and we also saw an uptick. It is a moderate, of course, on an annual basis, on a monthly basis too in North Rhine-Westphalia. But as you know, a lot of market players and analysts and economists look at this in anticipation of the bigger number for Germany that we're also expecting today. Now, it is an uptick for the region. When you look at the general German number, however, Anna, that we're expecting today, economists are still seeing a cooling down for the biggest economy in Europe. The interesting thing is, of course, is that if the trend that we saw play out in North Rhine-Westphalia features in other regions too, that would suggest that there are upside risks to the German inflation print. Again, a lot of that will get a clear sense when we actually get the number in a few hours from now. And of course, that takes us to the number that we're expecting from the euro area, which again, when you put all of this in a bigger context, this number really matters in a lot of the sentiment in the market, but also it really is the final data point before you enter the deliberation period at the European Central Bank, whether this is a hold or a hike. It's still at play in markets. And of course, there is still a doubt as to what is the monetary direction that the ECB will take in a few weeks from now.
Yeah, interesting to see the market reacting, bond markets reacting to this data set, then Maria, perhaps reacting to Treasury moves as well, but maybe driven by the domestic story. And we see those yields up across the curve, certainly in Germany, all the way across the curve. We see those yields a little higher this morning. Thanks to Bloomberg's Maria Tadeo with an update from Brussels. Coming up on the programme, we'll talk UK housing. Zoopla says UK home sales are on track to drop to the lowest in over a decade. We will speak to Richard Donnell, the Property Portal's Executive Director, next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Markets Today, 41 minutes into the European trading day, and very modest gains across European stocks, better in London, a little more negative elsewhere, certainly the Xetra DAX flirting with negative territory, and US futures just down into negative, down around 0.1% on NASDAQ futures. Let's think about the UK housing market, though. New data from the property website Zoopla shows that UK home sales this year are set to fall to their lowest since 2012. However, there may be some bright spots. The report found that affordability in London has improved for the first time in over a decade. Joining us now is Richard Donnell, Executive Director of Research and Insight at Zoopla. And I suppose that is a silver lining, isn't it? If prices drop and if volumes are dropping, then that would be a silver lining. But let me start with the negatives around this then, Richard, and I'll start with your expectation for how bad things get for the housing market. What do you think the trough is going to look like? Paint a picture for us.
Well, I think the big trough has been around activity levels. This big drop in the number of transactions down to 1 million. Others thought it would be lower than that, but I think it's, unfortunately, we could be trapped in a period of, sort of much lower transaction volumes. House prices are holding up better, but until we get prices dropping lower, affordability improving, you're not going to get that improvement in transactions. So transactions are likely to stay below their long-run average over the next year or so.
Okay, and how weak do prices have to get to trigger more transactions, Richard? I was looking at Halifax data running at around minus 2.5% down on the previous year. We're going to get data from Nationwide, I think, this Friday, which is shown as, well, the estimate shows a drop of 5% year on year. At the start of this hiking cycle, though, I remember some economists talking about a drop of 10, 15, even 20% in house prices. How much of a price drop would you expect to see?
Well, to get transaction volumes back up, you probably would need to see 5, maybe 10% off prices. Even if prices fall 5% this year, they're still 15% higher than the start of the pandemic. So households, homeowners have got equity to sort of forego if they're really keen to move. But a lot of people don't want to forego that equity, which is why transactions are suffering more than prices. So I think we're going to keep seeing sort of low single-digit nominal house price falls into next year. But I think the big recorrection is highly unlikely, because we didn't get the big overvaluation build-up on looser credit that we've seen in previous cycles. And we've got banks pursuing forbearance strategies, using interest-only mortgages to support people get through the payment shock of moving on to higher rates.
So banks perhaps being supportive in that regard. How big is the buy-to-let sell-off that we're seeing here, Richard? Because this, according to some people I've heard talking about this, seems to be a big feature of the markets right now and differentiates this troubled period in the housing market from previous troubled periods, because we didn't have quite such a big pool of buy-to-let landlords to sell. So how are we seeing those buy-to-let landlords behave this time?
Well, on Zoopla, 1 in 10 homes for sale was previously rented. So this has been a trend that's been running for the last 5 years. It started with tax changes in 2016, then it's been regulation. Now it's higher mortgage rates, sort of forcing landlords coming up to refinance to think about, what do I need to do? Do I need to put in more equity? It typically is hitting the sort of third of landlords who have a mortgaged buy-to-let property with a higher loan-to-value, over 50% loan-to-value. So it's not hitting all landlords, but it's reducing supply in the rental market, demand's up in rented housing, and so rents are rising by 9% year on year.
Okay, so that's the supply and demand of the rental side. And in terms of their attitude to selling and reducing prices, do you see buy-to-let landlords, are they the side of the market that is going to be forced to cut prices, Richard? You've said that hasn't really been happening very much yet, but is that what we're going to see driving this?
I think it's the price reductions are sort of coming across the board. The biggest pressure is in the south of England. The buy-to-let landlords tend to sell a property that's worth about 25% less than the typical homeowner property because they're smaller. Those properties are more appealing to first-time buyers. And so I think there's a market for more affordable, smaller homes at the moment. The real drop in transactions we're seeing is coming in that 3- and 4-bed family home market where people often just don't need to move.
Okay, so we're just deciding to stay put for the time being. What about cash buyers? It seems quite extraordinary the amount of cash buying we have in the UK housing market, given the price of housing. But where are you seeing? The report mentions cash buyers are still in the market. So where in the UK are you seeing that phenomenon?
Well, it's it's probably going to be over a third of transactions this year are going to be cash. The number of cash buyers is expected to be the same as last year. These cash buyers are typically older homeowners, down trading, relocating. We've got more than half of homeowners in this country don't have a mortgage, and they're the people who seem to still be moving. Around about 40% of landlords don't have a mortgage. So yes, cash is an important part of the housing market, and the real squeeze is coming through on those mortgaged buyers.
And what more could the government be doing here, Richard? I mean, you mentioned how banks are being creative and thinking about interest-only plans for people to try and cushion them from these higher rates. What is the expectation of what government might do?
I think the most important thing government can really do is just keep supporting house building in this country. We need more supply. More supply will boost choice. It'll ease some of the pressures in the rental market. And I think, look, the government has done what it needs to do with the lending industry. I don't think we need any specialist support schemes. I think we're simply in the position here of a market adjusting from a period of ultra-low mortgage rates to higher mortgage rates. I think the mortgage regulations that were introduced from 2015 onwards have had a big impact in softening some of that blow. So there's not much more the government can do other than actually focusing on building more homes, getting more supply into the market.
Okay, thanks very much, Richard. Thanks for your time. Richard Donnell, Executive Director of Research and Insight at Zoopla, joining us there with an update on the UK housing market. Let's go stateside, though, for an update on Hurricane Idalia, which is nearing the coast of Florida. It's been moving north at around 15 miles an hour. This according to the National Hurricane Center. We're getting these updates regularly. We're showing you live pictures of Florida. And this has now been upgraded. It was upgraded to a Category 3 hurricane on that level 5 scale. This is Cedar Key in Florida that we're seeing images of. And expectation is that we see a catastrophic storm surge and destructive winds expected in the Florida Big Bend region this morning. So that's Wednesday morning US time when Idalia moves inland. We'll keep an eye on developments there. Coming up on the program, the case for raising rates. We'll discuss inflation data out of Germany later today after early signs of sticky consumer prices in Europe. We'll get back to that conversation and weave that in with the latest on the weak data out of the US. This is Bloomberg.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to The Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Markets Today. We're 51 minutes into the European trading day. Very modest gains across Europe. Actually picking up a little bit, though. The Stock 600 now up by 0.2%. DAX out of negative territory, it seems. Let's take a look at some of the top red corporate stories on the Bloomberg terminal this morning. Apple says it will unveil its iPhone 15 line and next generation smartwatches on, fittingly, September the 15th, with a live event at its Steve Jobs Theatre in Cupertino, California, and an online presentation. Apple sales have slid negative for 3 straight quarters as the company contends with shaky demand for smartphones and other devices. Tesla is facing increased scrutiny from federal regulators over its driver assistance system known as Autopilot. Investigators want to know if the function has made it easier for drivers to take their hands off the wheel. They are concerned it may mean drivers do not stay alert and ready to resume full control of the vehicle. And Bloomberg has learned Lufthansa is looking to sell its insurance brokerage unit, that's Arbitrage, and its insurance business, Delvag, as it pushes to streamline operations. The German airline has been selling non-core businesses in a bid to raise cash as it focuses instead on consolidating Europe's aviation sector. Let us talk about what's happening in these markets. Ven Ram joins us from our Markets Live team. Ven, let's start with the European data picture then. So some of these data numbers coming in a little hot this morning. Does this suggest, it seems that we're retracing some of the yield drop of yesterday in Europe, and we've got yields going higher in Europe. Does this lean into a rate hike in September for you?
Morning, Anna. It definitely tilts the ECB, puts the ECB in the direction of a rate hike in September. We saw the North Rhine inflation numbers coming in at 0.5%. That was way higher than 0.2% that we saw in the month earlier. And this data series has a correlation, uncanny correlation with the national series, which we are due to get later. And what we saw in Spain as well showed that inflation is pretty firm. Those inflationary numbers mean that the ECB has to go probably from 3.75 to 4% in September. I don't think there's a choice. We've already seen the hawks lining up for a hike, and this data print is likely to embolden their case.
Okay, and where do we stand on US data then? Of course, we had the job openings data yesterday in session, Ven, and combined with the weakness in consumer confidence, that seems to have prompted a lot of people to either consolidate views or pivot to views of a Fed pause. Do you expect the Fed to pause from here?
I think there is a very high chance that the Fed may pause in September, but I don't think it's the end of the hiking campaign, simply because what we have seen with the JOLTS data last night and the consumer confidence data is pretty much in line with what we have been seeing throughout this year. Except for April, when we got an uptick in JOLTS data, we have seen a consistent downtrend. What that shows is that employment payrolls for this cycle have peaked, but that is far from saying they are at a turning point. And that will mean that, and real rates are still ticking higher, as we learned from the New York Fed researchers a couple of weeks ago, with them saying that the real neutral rate in the US economy is going to accelerate to 2.5% by the end of this year. If you combine those two, what you think is that the Fed may pause in September, but it's far from done.
It's far from done. So that's going to be an interesting message to communicate then if we do see a pause. Are you expecting that inflation resurges? Does that explain why you think the Fed is going to go back to hiking?
I think there is a chance that inflation may tick higher, even though it may not be as resurgent as we have seen earlier on in the cycle. But I think the markets are underpricing the risk that inflation is going to be bobbing around 3 to 4% on the core in the US, and that's something that the markets are glossing over. They are thinking that they're waiting indefinitely for that inflection point, and I don't think we are there yet.
Okay, interesting that you take a different view then to what we see on short-end rates to Mark Cudmore, also on the Markets Live blog. Ven, you're still friends, I'm sure?
Well, I'm still friends. Maybe you'll be prone, right? But, well, the point to remember is that the markets have been paying for a rate cut since the start of the year, and that hasn't happened. They were positioned for a rate cut in the second half of 2023. Now they're kicking the can down the road. Let's see how long this economic resilience plays out. I think, considering how strong aggregate demand has been in the US economy, I do think that there is some more way to go for the US consumer to cave in.
Okay, Ven, thanks very much. Ven Ram from the Markets Today team. Plenty of divergent views available to you on the Markets Live blog. You can find Ven's view, Mark Cudmore's view on rates. MLIV Go is the function to use on your Bloomberg terminal. If you want to get across the Markets Today blog, Sophia Horta-Acosta, Sam Onstead and team, you can find those insights by going to the Bloomberg UK website, click through to the blog, or go to TLIV Go. This is Bloomberg.
person who might like to have a career like yours, what would you recommend? How can you prepare to be the national security advisor or to serve your government in some way?
The biggest piece of advice I try to give young people is to reject certitude. What I mean by that is that no matter how good you think your argument is, or your policy position, or your proposed course of action, it almost certainly has weaknesses or blind spots, and you should acknowledge those. I think actually sometimes saying, you know what, I was wrong, you were right, is actually a more powerful show of intellectual strength than just sticking firmly by your position. Doesn't mean you should compromise your principles or your values, but the easy decisions do not rise to the White House. The hard decisions do. And those hard decisions have two sides that are not 100-0.
And the markets are on the move.
The focus, of course, is on Ukraine.
The market is so hyped up about AI.
Unless we see dramatic changes, it's just going to keep getting hotter.
For further market analysis,
we're going to go get straight to some breaking news. We'll have a full roundup.
Going through some of the numbers.
And what investors should make of them.
We have so many important conversations.
Let's check in what you need to know.
Fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. And here's what's coming up on today's program. A bellwether German state posts a surprise CPI jump in August, suggesting that the ECB may have more hikes ahead, while Spanish inflation quickens again. The latest U.S. jobs and consumer data offers support to investors, speculating that the Fed is nearing the end of its tightening campaign. Plus, UK property portal Zoopla says home sales are on track to drop to the lowest in over a decade. We'll bring you the latest mortgage data later this hour. So first thing is first, good morning. Happy Tuesday. Let's take a look at the European markets map. There's quite a lot going on actually across the board. And of course, I'm reminded that it was a bank holiday on Monday, so happy Wednesday. There you go. We're a day ahead of where we're expected to be. We have quite a lot of data, U.S. jobs on Friday. Now, the markets are looking at two things. First of all, this is the European map. European stocks are wavered a little bit, so they're still gaining a bit of support, but the bonds fell flat after the latest data suggesting that inflation may not yet be on the retreat in Germany. In fact, if you look at Germany's 10-year yield, it jumped 4 basis points after the consumer price index, which is in the bellwether state of North Rhine-Westphalia, rose in August. What this means is that the waters are a lot more muddied for European policymakers. Also, after in the U.S., we had a very different story. So let's also look at Treasury yields in the U.S. slumping to the lowest levels in more than a week. This is after the bigger than expected declines in gauges. Looking at job creation consumer conference really prompted a bet on what bond traders did in terms of assigning lower odds that a Fed interest rate hike this year would happen. So that's the impact that it's had on the U.S. 2-year yield. And then the other big story today, global stock bulls are back in the driver's seat. Now, this, without a doubt, is one of my favorites data points that we're looking at. And this is thanks to David Inglitz for putting this together. It's the Fear Greed Index, and it's back in positive territory. Now, a reminder to everyone that in traditional markets, the Fear and Greed Index measures investor sentiment based on factors, including volatility, momentum, and demand. And so you can see there that they seem to be back. What that means going forward, usually September is a busy week anyway. Then we're getting more breaking news. So we had North Rhine-Westphalia. This is the bellwether state, but we're getting, week after or region after region in terms of what Germany has been seeing. So if you look at Bavaria, that August price is rising some 0.3%. Hesse August consumer price rising 0.2%. Again, the general feeling is that there is a bit of muddied water for what the ECB does next, because we were hoping that inflation was coming down, and actually it's not quite as clear-cut as expected. The other piece of breaking news is China. Now, this is the story that we've been following for a pretty long time. China's asking CITIC to examine finances of shadow bank Zhongrong. Again, there have been a number of policymakers putting in place a number of things to try and support the consumer over in China. Unclear whether it will give a boost to consumer sentiment in China. And then some of the biggest concerns are retail with, of course, property and then the shadow banking, as we've seen in Europe. So we're now seeing the first step from the government to try and deal with shadow banking, or at least look at what's inside some of these shadow banking financial services. Now let's get back to our big story of the day, which is European inflation. And let's get to Jana Rando in Frankfurt. Jana, what are your thoughts on the German inflation numbers this morning? How much does it complicate the picture for the ECB? And good morning.
Good morning. Well, I didn't really expect a clear answer from inflation anyway, because after all, what can 1 month of inflation data tell you? But of course, what we're seeing is offering even fewer answers than I certainly had expected. We saw a much faster than anticipated increase in consumer prices in Germany's biggest, most populous state. The other ones that have come in at the top of the hour, they're slightly more in line with the estimates economists have in their books. But what that means, and that's what's really important, is that inflation in Germany will stay above 6%. And obviously that cannot be satisfactory to anyone. Inflation accelerated also in Spain. In France, it's expected to accelerate again. So a lot of bad news really for the ECB as it prepares for its upcoming meeting.
Yeah, and Jana, how difficult is it actually to be the ECB in this point of time, especially when we had that jobs number, changing the narrative at the margins for the Fed going forward? I mean, if you don't have a convergence, it makes it much harder, I guess, to fight monetary policy.
Yeah, I mean, certainly I wouldn't want their job at the moment. It is very complicated. You have an economy that is slowing down. You have inflation that is proving very stubborn. And you don't quite know how that last leg of policy transmission from that slowdown in the economy, from weaker demand, will actually filter into inflation, given that you have this tight labor market, that firms are retaining their employees. And so that makes it very complicated. The one thing that policymakers still are waiting for are updated forecasts, so they might actually help them find answers to those very questions. They are in the process of being compiled at the moment, so we don't know what they are going to show. But my hunch is they're not gonna have clear answers either. So what we listening to policymakers over the past days, what seems to be emerging is a leaning among the hawkish community in the governing council to go for that final hike or that one more hike in September, take the deposit rate to 4%, because they say we haven't conquered inflation yet. It's much safer for us to err on the side of doing too much and then being able to retreat rather than not doing enough. So. Market is pricing that at the moment as well. So that's where, what I would expect from this point of view.
Jana, thank you so much. Jana Rando there in Frankfurt. Now joining us to talk more about inflation figures and what we can expect from the Fed, HSBC Global Chief Economist Janet Henry. Janet, always great to have you on set, but especially on a day like today where there's so much inflation to try and understand. How much does this complicate the ECB's job going forward? Again, I know it's 1 month. I know it's a big economy, but it's really one of the leading ones. Could we have missed this inflation trend?
No, I actually think that it is a continuation of the trend. We can move on to the US, but actually inflation has been a lot stickier in the Eurozone, and what's different is that wage growth has been accelerating. One thing I would point to, the North Rhine-Westphalia figure was something of an outlier. We've now had something from the other states that wasn't quite as scary, but we have been looking for another rate rise in September. We think that will be the peak. But the growth numbers are weak, the PMIs are weak, but we need to think about the fiscal side of things, which is a lot more supportive for the economy, and the ECB is aware of that. The risk is now one, arguably, of stagflation.
But so, Janet, what does that mean? So is it going to be communication? What's the biggest job right now for the ECB, especially when you have countries like Italy that are blaming everything on the central bank?
Well, I think, we had something of this kind of message at Jackson Hole. certainly from Lagarde and not just Lagarde, from Powell as well, about the risk of a persistently higher rate of inflation. We may have fallen from the peak. There are lots of structural factors out there, and the Eurozone has a particular issue regarding labour markets. Central banks always face pressures from governments. It's always easier to blame the central banks, but actually a lot of the fiscal support is coming from the governments, and not so much just national governments. In fact, our European economists published a piece this morning all about the recovery fund. Remember that? They haven't spent much of that yet. A lot of that is going to be feeding through into the economy over the course of the next few years.
So, Janet, when you look at it, I guess the ECB, is there a concern that they want the credibility so badly that they'll over tighten and then push basically what's the biggest mistake, right? If they hold off higher interest rates, or actually if they're too loose.
Well, this has been the risk. Which is worse, the risk of doing too much or doing too little? We need to remember that central banks have one goal, and that is price stability, and that is their inflation credibility. Now, also the ECB has to ensure the sustainability of the euro, but therefore, given their primary mandate of price stability, the risk is always that they'll risk doing too much rather than too little, because they know how to now seemingly to revive inflation. The risk is that it stays persistently higher for a lot longer, and all of the implications of that continues to feed through onto the economy.
So when can you, with confidence, say that we've seen the price hikes that we've done in the last 12 months through to the real economy? It's unclear if the lagging time is 12 months, 18 months, or could actually take longer.
Well, monetary policy works with long and variable lags, and we always think about monetary policy impacting on the demand side of the economy. What does it mean for the labour market? What does it mean for consumer demand? And arguably, what does that mean globally through the export channel? But we need to consider the fiscal side, and we need to consider the supply side of the economy.
Yes.
And it's putting all of that together that the central banks are going to continue to struggle with. But it's not just a question of how many more hikes. We know we're close to the peak. Whether it's one more, two more, or no more, in all the major central banks, the question is how long do they have to stay high for, and how much will they eventually be cut? Financial markets always want this V-shaped recovery and 500 basis points on rates. We may never get there. It may just be quite an extended period, and the rate cuts, when we get them, actually being remarkably modest.
But could you see a big differential between what the US and the Fed does and what the ECB needs to do going forward? Or again, we speak to traders this morning that say, look, this has muddied the waters because after the JOLTS data yesterday, they thought the Fed would do one thing, and now the global economy is looking about more patchy.
I think there is a difference between the US and the Eurozone, and a lot of it does relate to the labour market and to the wage data in particular. Now, we think that the Fed has peaked, but there is a chance, and certainly don't expect a rate rise in September. Of course, there's a chance that they have to do one more. But yes, we have got some rate cuts in 2024 from the Fed. We've got nothing from the ECB, and we feel pretty certain that they will be raising rates in September.
Is this small cuts from the Fed? And again, when we hear central bankers in press conferences or in interviews, they're really at pains in reminding everyone that we're not going to go back to the zero bound.
Well, we're not on any plausible central scenario at the moment, but a lot can happen that you don't see. So, I'm always very careful not to rule out anything, particularly if there were to be any risk of any kind of financial crisis.
Which is not in your base case.
Absolutely not in our base case. In fact, we've never been in the traditional recession camp. The market was convinced it was going to be first half 23 recession, then convinced it was going to be second half 23 recession, and now it's going to be a 2024 recession. It's not going to be a traditional recession. It doesn't mean you can't have 2 or 3 years of extremely weak growth, well below trend, and it is a much more gradual adjustment. But don't just think about the demand side of the economy, the labour market weakening, slowing consumer demand. Consumer demand has been booming in the US. Of course it's going to slow, and slow markedly. But the speed with which it feeds through to inflation and the need for the Fed to cut aggressively, I think will take some time. So we have just very modest cuts in 2024.
Janet, thank you so much. Janet Henry, of course, stays with us, and we'll talk a little bit about China next. And then after that, we'll talk UK when we get the mortgage numbers. Stay with us. This is Bloomberg. So Fabien, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg. The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, let's recap some of the breaking news that we had this hour. Bloomberg understands that China has asked two of the nation's biggest financial firms to examine the books of Zhongguang International, potentially paving the way for a state-led rescue of the troubled shadow lender. Meanwhile, Bloomberg has also learned that China's biggest banks are preparing to cut interest rates on existing mortgages and deposits as the latest state-directed measure to shore up economic growth. Well, still with us, HSBC Global Chief Economist Janet Henry. Janet, thank you so much for staying with us. When you look at China, what's their biggest concern? So is it retail? We're following, is it real estate actually? We're following all of the concerned defaults. And would it be letting bubble out of the system, or could we actually see a crash that could take the economy down with it?
I think the property sector is still the biggest concern. We know that there has to be some kind of deflation of the property bubble. Yeah. We've seen that elsewhere in the world. We saw it in Japan, we saw it in Spain in various decades, and it's over what period and how you manage that deflation of the property bubble. And it's quite clear from the latest round of measures that they are going to do their utmost to avoid any kind of crash. We're not going back to a world where property drove over half of the GDP growth in the Chinese economy, but they don't want it to be so severe that it impacts on the rest of the economy. So I fully expect that we see another slew of measures. We've already seen them in recent days, further easing of policy, even allowing people that own a home, if they buy a second one, if they own it outright, they can be a first-time buyer on their mortgage for their new home. So that will feed through. But sorry, yeah.
Will they work, these measures? So we've seen quite every 4 days there's a new measure that's meant to boost the economy and support consumers.
Well, a lot depends on how it feeds through to the availability and the cost of funding, but also to confidence. And, of course, what happens in the labour market. There are still lots of people in China that do not own their own home, never mind their second or their third home, but don't own their first home, who want to. And if they feel confident about the future and they can find an available loan at a reasonable cost for what they are earning, then you can eventually get some kind of stabilisation. And also, we know that there is going to be some kind of restructuring plan, a lot of it related to local government funding, how that can feed through to the economy. So I think this won't be the end of the measures. We will see more in order to manage that ongoing deflation and allow some stabilisation in the property market.
Shadow banking is one of the most difficult things to actually look into and see what kind of liabilities there are. With the measures that the Bloomberg scoop saying that China has asked two of the nation's biggest financial firms to examine the books of Zhongguang, do you worry that they could be also on a cusp of some kind of financial event?
Well, I think it's something that probably can be managed. We know that whenever there are financial strains in an economy, often it's in the smaller banks. Obviously, we had what happened last September with the US banking system, or in the shadow banking system. That's always something that's harder to see what's going on underneath the hood. But these are massive financial institutions. So whether there's some kind of government-led or government-backed solution with the larger institutions taking over the banks, as of course what happened with the US banking system, that will be the interesting side to see. And then it's your usual options. You can restructure the debt, you can sell the assets, because it seems like they're not going to grow their way out of their problems at the moment.
Yeah, and there's so much actually bearishness on what the China economy is going through and will go through. How much does it impact the rest of the world?
Well, for commodity producers in particular, obviously it can impact quite negatively, but we also know that there are various geopolitical developments underway in the world regarding the BRICS and such like that are leading to new trading relationships. And some commodity prices are actually still being supported by China demand. You know, iron ore prices haven't been doing too badly. The oil price hasn't been too badly. You know, that's one of the things people missed in the European inflation numbers, that August petrol pump prices did go up. You know, the commodity price story is not clear-cut. We're used to one where global growth slows down, all commodity prices fall. Actually, we've got a different moving parts, and don't forget the weather. Even India's inflation surprised massively to the upside because of food. It still matters.
Janet, thank you so much. Janet Henry there from HSBC stays with us, and we'll talk a little bit later about the UK and mortgages. Also coming up, a big win for the crypto sector. More on the grayscale SEC ruling next. This is Bloomberg.
Soros Fund Management CIO Dawn Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman Sisters rather than Lehman Brothers, the world might well look a lot different today.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Welcome back, everyone. So Grayscale won a key legal battle in a push to launch a spot Bitcoin ETF. Now, the ruling actually brings the U.S. crypto industry one step closer to tapping billions of dollars from everyday investors. Well, Bloomberg's Kelly Lyons has the details.
Grayscale has moved closer to launching a spot-based Bitcoin ETF in the U.S. in what is potentially a watershed moment for the crypto industry. A D.C. Circuit Court handing them a victory when a 3-judge appellate panel overturned a decision by the SEC to block the ETF. They said in the ruling, this is a quote, "The denial of Grayscale's proposal was arbitrary and capricious because the commission failed to explain its different treatment of similar products. In the absence of a coherent explanation, this unlike regulatory treatment of products is unlawful." Basically, they're poking a hole in the SEC's argument that a futures Bitcoin ETF, which already has been approved in the U.S., should be treated differently than a spot-based product. That is something the SEC has said because of fraud and manipulation, and yet it doesn't seem that this court is buying that argument. Now, this is not to say that GBTC, the Grayscale Bitcoin Trust, is going to convert into a spot ETF tomorrow, but it is still a big moment in that direction. This now goes back to the SEC, and they do have some recourse here. The SEC, through a spokesperson, said in a statement to Bloomberg, "We are reviewing the court's decision to determine next steps," and they still could fight this. They could ask the full D.C. Circuit Court for a review. They have to do that within the next 45 days, though our litigation analyst here at Bloomberg Intelligence, Elliot Stein, has said he doesn't think that would yield any kind of different result. There is also the ongoing question about what this means for other spot Bitcoin ETF applications that have been filed. None have ever been approved in the U.S. to this point, but we have seen a wave of them recently from the likes of BlackRock, WisdomTree, Valkyrie, and others. And it's a question how this ruling in the D.C. Circuit Court on Tuesday makes a difference, ultimately, in the spot ETF race here in the U.S. In New York, Kaylee Lyons, Bloomberg News.
And don't miss our interview coming up later today on Bloomberg Markets with the chief executive of Grayscale, Michael Songnonshine. That's at 3:45 p.m. London. That's at 10:45 a.m. New York time. Coming up, we're watching the latest UK mortgage approvals. The data due to land in the next few minutes. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
A bellwether German state actually posted a surprise CPI jump in August, suggesting the ECB may have more hikes ahead while Spanish inflation quickens again. The latest U.S. jobs and consumer data offer support to investors, speculating that the Fed is nearing the end of its tightening campaign. Plus, UK property portal Zoopla says home sales are on track to drop to the lowest in over a decade. We'll bring you the latest mortgage data very shortly. So good morning, everyone, and welcome back to The Pulse. I'm Francine Lacqua here in London. So we're talking UK home sales are on track to drop to the lowest in a decade this year. That's according to data from Zoopla. And the latest UK mortgage data is out any minute. Still with us, Janet Henry, Chief Global Economist at HSBC. Janet, if the ECB and the Fed have it tough, the Bank of England may have it tougher because of the tight labor market. That's tight. I mean, it's harder to get people back into work here than anywhere else. Are we giving the UK too hard a time? Do you think it could actually surprise to the upside?
Well, the labour market is a particular issue in the UK. We have seen some improvement in the participation rate, but nothing like we've seen in the US or France or Germany. We have this particular problem with inactivity. But we did, in the last labour market release, see the early signs that the labour market was softening. And as labour markets soften, you see less churn. Like we saw in the US, the quits rate actually fell back, the jolts rate has fallen back. And that's where you get the wage growth. It's when people change jobs rather than getting an 8 or 10% pay rise in their current job. So that's the early signs that if that feeds through, we may see some softening on inflation. But the UK has got the particular supply issues that the rest of the world has got, but also Brexit related. And together with the labour market issue, it's got, different parts of the economy are more resilient than others. Parts of the economy have been in a recession for some time. Parts of the economy remain more resilient. It's just not really growing.
Janet, we're also getting some UK July mortgage approvals. There are 49,444. The estimate was 51,000. So it's a touch below. It's a touch below. It's 49.9. Do you worry about the housing market in particular? If you look at all of the data points out of the UK, what worries you the most?
Well, when interest rates rise, anyone dependent on leverage feels the pain.
Yeah.
And, the UK housing market is particularly interesting because of the whole population, about a third of people don't have mortgages because they own their own home. A third of people don't have mortgages because they're renters. And a third of people have got mortgages and they're what's feeling the pain. But the lags will feed through. And this is the challenge the central banks obviously face. How much higher do you have to go rather than how much do you have to keep it at these levels? But we know in the UK mortgage market, the market's still quite tight. There's not enough houses on the market.
How much higher do you think the BOE will go? The language I thought was striking in the last press conference because it mirrored what the ECB was saying.
It was, but the UK is more sensitive to short-term interest rates than the majority of the Eurozone. In France and Germany, when people, take out a 20 or 30-year mortgage, a lot of them have still got their 1.5% mortgage rates for the next 30 years. It doesn't work that way in the UK. 5-year fixes are more important, and that has provided some insulation for certain people against these rate rises, so it will feed through. So on the Bank of England, it's very similar to our ECB view, actually. One more rate rise at the next meeting, but rates on hold for quite an extended period, no rate cuts next year.
What does it mean for the mortgage market and for house prices? Could we see a crash?
I think it's unlikely that we see a crash, just given that supply-demand imbalance. Okay. There are few in the way of forced sellers. And until you see a significant rise in unemployment, so that would be the trigger. We wouldn't get a property crash unless we were to see quite a significant rise in unemployment of mortgage holders.
Janet, when you look at currencies, and I don't know whether sterling could be supportive or not, there's quite a lot going on also in UK politics that then translates into economic policy. How do you navigate that?
Well, I think that the currency, obviously sterling has rallied from its lows, and it's been pretty stable within a tight range against the euro. So actually, I think as much as changes in relative interest rate expectations will to some extent matter for sterling, a lot of it I still think will be something to do with the cross rate between euro dollar rather than something independent in the UK.
So overall, are you confident? I mean, we could also see a change in politics. So without talking about the politics, is I guess the economic agenda more uncertain here because we could see a change in government at the next elections.
We could, but remember we've got elections in a lot of places. By the end of 2024, we could have a different administration in the US as well. But regarding investment spending and expectations regarding whether it's something to do with wealth taxes or income taxes and such like, that can affect consumers' decisions and indeed company decisions.
The BOJ, we haven't talked about the BOJ. It's probably the most interesting one out there. I mean, is there a question mark on whether the BOJ will have to get in line with all the other big central banks or whether actually 2 years from now it'll be the other way?
I think Japan has already been quite fascinating. You know, in a world where all the major central banks have been grappling against much higher than expected inflation, Japan is the one country that's celebrating the fact that after 3 decades they might be getting out of deflation. And we obviously have seen some significant modifications in terms of yield curve control. Some people have argued that's played a role in the rise in US bond yields. I think more it's been the strength of the US economy and indeed some fiscal concerns that's driven that. For Japan, if the recovery continues and the labour market side data, it does firm through in terms of wage growth and core inflation does continue to rise, that's when I think you'd see some global implications of it. But a lot needs to go right for Japan to actually be raising interest rates over the course of the next year or just more.
Janet, thank you so much, as always, for joining us. That was Janet Henry, Global Chief Economist at HSBC. Now, let's also go back to some of the latest China data that we've seen. Actually, this is ICBC coming in. We also have Bank of China. So this is 2 big financials. ICBC, that's first half net income coming in at 173 billion yuan. Now, this means that year on year, it's up 1.2%. We also have Bank of China, that net income is up 0.8%. year on year. So we'll be covering all things China. We'll also be covering all things UK, and that's a little bit later on in the week. We'll have plenty more on China, including our Bloomberg scoop saying that China has asked 2 of the nation's biggest financial firms to examine the books of Zhongrong International, potentially paving the way then for a state-led rescue of the troubled shadow lender. That's according to people familiar with the matter. So Bloomberg scoop, and we'll have plenty more on that next. This is Bloomberg.
Person who might like to have a career like yours, what would you recommend? How can you prepare to be the national security advisor or to serve your government in some way?
The biggest piece of advice I try to give young people is to reject certitude. What I mean by that is that no matter how good you think your argument is, or your policy position, or your proposed course of action, it almost certainly has weaknesses or blind spots, and you should acknowledge those. I think actually sometimes saying, you know what, I was wrong, you were right, is actually a more powerful show of intellectual strength than just sticking firmly by your position. Doesn't mean you should compromise your principles or your values, but the easy decisions do not rise to the White House. The hard decisions do. And those hard decisions have 2 sides that are not 100-0.
The top top names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority. All eyes are on the U.S. jobs report.
We're still seeing some lingering effects of the pandemic on the jobs market.
There has been a shift to labor, and it doesn't seem to be diminishing.
This labor market is still tight.
This Friday, the surveillance team brings you the crucial jobs data and expert analysis at terminal speed.
Are we beyond COVID?
We are on that path to get to lower inflation by the end of the year.
But then you look at the unemployment rate, you're looking at a problem for the Fed.
The August jobs report, Friday on Bloomberg Television and Radio.
The conversations that matter, the insights you need. This is a Pulse. I'm Francine Lacqua here in London. Now, the British Foreign Secretary, James Cleverly, is visiting Beijing today. He urges China to help bring Russia's war in Ukraine to end as he tries to mend the UK's ties with the world's second largest economy. Now, let's bring in Bloomberg's Sofia Ortega-Costa. More on the politics shortly, but first, we also got some pretty big headlines, Sofia, on, of course, China asking the biggest financial firms to look at shadow banking. Is this alarm bell? Should we be concerned about this?
This is an important step. It does seem like Beijing is looking to perhaps lead a state-backed rescue of this shadow bank. So what essentially happened is shadow banks, they're the alternative funding source for not just developers, but for companies that can't get loans via banks because the lending conditions are so strict in China. So the concern is that there could be a cascade of financial risk if we do get this company collapsing in a disorderly fashion. So the fact that CITIC and CCB Trust, two companies that are linked to state-backed lenders, are looking at the finances of this shadow bank suggests that the same that happened to China Huarong, the bad debt manager in 2021, could also happen to this shadow banking. So what this tells me, Fran, is that authorities are kind of tightening their grip and also increasingly concerned that this could spill over to the rest of the financial system.
But is it something that they can manage, or could we see a significant financial event? Again, shadow banking is one of the trickiest things to get a handle on, probably one of the most dangerous if it unravels.
Yes, exactly. And the problem is that it's not entirely clear how big it is. There are estimates over the size of the shadow banking sector, and China has cracked down on it in recent years and made it smaller because of the spillover risks of the financial system. China did handle the Huarong crisis quite well, and there wasn't a spillover back then. Actually, it was almost a poster child of how to do a state-backed restructuring and bailout. It was a big one back then. So if they follow the same playbook and the restructuring follows through in the same way that it did, then it could be positive. I mean, you do want the state, you do want Beijing to kind of take charge here because of the risks that it poses to the economy in general.
So, Sophia, let's also talk about the politics, but first let's hear from the UK Foreign Secretary, James Cleverly, who is also in China. Here he is.
Well, my visit here is about the bilateral relationship between the UK and China. In my meetings, both here and in previous meetings in the UK, I have said that Russia's brutal invasion of Ukraine cannot be justified by Moscow or indeed anywhere else.
So we have the UK Foreign Secretary there at the moment. We have the US Commerce Secretary also in Shanghai. Is this a general push from the West to go to China for friendlier ties, and what do they need from China?
I think that's a really important question, Fran. And how the Commerce Secretary, the US Commerce Secretary, Gina Raimondo, separated the two things. One is diplomacy and how both the UK and the US are pressuring China, especially on the Russia-Ukraine war front, but also Taiwan, Hong Kong, a lot of interest there. That's one thing. And I think there's hawks back at home, China hawks, who really want that pressure to continue. And the other side of things, and this has been very important that both the US and the UK say these are two separate things, is economic ties. Right. So strengthening those ties, that can coexist
August, essentially, with more pressure on the diplomatic side of things. And I think that's where the messaging is right now, because it is important for the UK, especially following Brexit, to show that, you know, there are benefits to leaving the European Union, and one of them is to renegotiate on the trade front and to kind of have a little bit more control over that China economic relationship, Fran.
So what's your take on the Foreign Secretary, James Cleverly? What was his welcome like? I know a lot of the times it's about the body language. Do they welcome the UK more than the US?
I think the US meeting from the China perspective is more important.
Yeah.
It did open the door for the UK meeting, and I think there's a perception in Beijing that the UK does whatever the US says. I'm sure the UK would have its own response to that. But it was a warm welcome. I mean, this is a time when authorities in Beijing are seeking to re-engage more with the West. After 3 years of essentially being closed and pursuing this isolationist policy, there's a lot of domestic issues that China is going through right now and is dealing with, not least with the property market, but re-engaging with the West and projecting this kind of more business-friendly approach is a very, very important step towards attracting foreign investment. So I'm sure he was warmly welcomed, Fran.
When you look at, I mean, the big news is also that Vladimir Putin is going to China. Is that, I don't know how China handles that.
And exactly, I mean, Cleverly said that no nation should legitimize Putin, and clearly China's support of Putin, diplomatic support, you know, not really the kind of support that would concern US and the UK quite yet. But how will China welcome Putin, and how will it position itself with this visit? The last time Putin visited China was 3 weeks before Russia invaded Ukraine, widely perceived to be kind of a surprise for China at the time, because it was when Xi and Putin declared this kind of no-limits friendship. So how will China position itself here? Will it be a neutral actor, try to end the war? That's how it's been trying to project itself in the recent months. Or will we again get a kind of closer relationship between the two countries that could potentially worry the US and the UK?
Sophia, thank you so much as always. Sophia Ortega-Costa there with the very latest on China, both the politics but also the economics. Now coming up, airlines scrambling to recover from the biggest aviation outage in the UK for a decade. We'll have our reporter here with me in the studio. This is Bloomberg. So Fabien, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, we're just getting some breaking news out of Gina Raimondo, the Commerce Secretary. She's speaking actually in China at a Boeing factory, and she did say just 24 hours ago that U.S. companies have been telling her that China is becoming increasingly uninvestable because of growing risks to doing business in the world's second largest economy. So we'll see exactly what she continues saying. The comments, of course, from the top trade promoter underscore that commerce has become one of the main strands of tension between the U.S. and China, even as she and Chinese officials that she met last week seem to stress that the economic ties are key to sustaining a working relationship. So we'll see, of course, from her comments and her body language what that will lead to. Now, China Airlines is planning to boost its fleet with more fuel-efficient aircraft as part of its sustainability push. The president of Taiwan's main carrier tells Bloomberg that the airline is looking for a new balance between cargo and passenger in the post-COVID times.
We are coming back. We are coming back. The passenger is about 50% same volume compared with the 2019 pre-COVID. And for the first half, 2023. But right now, we are looking for the very significant increasing at the second half. We will have the 70% to 80% coming back compared with the pre-COVID. And we are very confident about this increasement.
When do you think you'll get back to pre-pandemic levels?
According to the IATA forecast, probably need to wait until 2025.
We saw cargo demand was boosted, and it in some ways really did save your airline during the pandemic. In fact, you made nearly record revenue during 2021. That sort of trend is reversing now, and cargo demand is stabilizing. Where do you see the bottom? Where is that going to settle?
I would say that the demand of the cargo is not as high as before, and but we will try to find a new balance, which is not the sports shoes. The new balance between the cargo and the passenger. And so we will try to find out how many percentage we needed focus, put the capital in the cargo.
So what is that new balance? What is the right mix between passenger and cargo now, you think?
We're still looking for that, because that need to be dynamically evaluation for that. But probably go back to the before 2019, it's about the 30 to 70% ratio.
The China Airlines president speaking exclusively to Yvonne Aman. Now, airlines are rushing to restore flight operations in the UK and repatriate stranded passengers after the worst air traffic outage in a decade. Returning to normal service could take several days after hundreds of delays and cancellations on one of the busiest days this travel season. Let's bring in Bloomberg Sid Phillip. Sid, I go to you all the time, say, is my flight going to be delayed? And you say, keep cool, maybe, maybe not, because exactly, you know, of what happened on Monday. First of all, what do we know, and how long does it take for flights to readjust their paths?
Yeah, so what we know so far is that the NATS, which is responsible for airspace control in the UK, has said that a piece of incorrect data is responsible for the system shutting down, and it was part of an automatic process to prevent the system from having any further issues. And that really caused an outage that affected more than a quarter of flights coming in and going out of the UK, hundreds and hundreds of cancellations and delays. And so it's really, the airline industry has to now bring back their sort of aircraft, bring back crews, and sort of restore operations. And because of the cancellations and delays, aircraft that should have been in one place are in another place, and crews are out of hours. And because of that, it takes a while to rebuild operations. And so we have seen sort of continued cancellations, but obviously at a smaller volume than on Monday, really.
So how long does it take usually? And do they, try and safeguard the long-haul flights and actually prefer the impact on the more short-haul flights? Do we know how much this would cost some of these airlines?
We don't yet have an estimate on the cost, and NATS has said that they're going to put out a preliminary report on what really happened on Monday. And so we have to see what the causes were. But in terms of the impact on airlines, I mean, this is the busiest travel season of the year. And so there's very little slack capacity in the system in order to sort of repatriate passengers, put people on alternative flights, sort of run extra flights. And that's really causing issues in terms of people being stranded. It's also causing issues in terms of airlines not being able to redeploy aircraft on the route. And the reason why short haul was more impacted is because especially on some routes where there's multiple frequencies, airlines can sort of afford to be able to reroute people or sort of combine flights, whereas long haul typically tend to be much longer in terms of duration, and so aircraft need to be in position, and that's why they prioritize long haul versus short haul.
And Sid, at the same time, the Ryanair chief executive pulled no punches.
Yeah, I mean, airline CEOs are furious. I mean, there's no doubt about it. And especially, I mean, IATA has been talking about how can a single piece of data cause the entire system to shut down? And there will be sort of questions that airline CEOs bring towards both the government and NATS in terms of the resilience of the system and the fact that it failed at what is the busiest time of the year, and the cascading impact on the airlines in terms of having to compensate people not by way of financial compensation, but having to accommodate them in hotels and rebook them and offer them. So it's essentially the airlines are having to pick up the brunt of the expenses for this outage.
Sid, thanks so much, as always, for the terrific briefing. Our Bloomberg Global Aviation senior reporter, Siddharth Philip. Now, meanwhile, Bloomberg has also learned that Lufthansa is looking to sell its insurance brokerage unit, Albatross, and insurance business, Delvag, as it pushes to streamline operations. Now, the German airline has been selling non-core businesses in the bid to raise cash as it focuses on consolidating Europe's aviation market. And UBS expected to report its second quarter results tomorrow before a cash trade starting in Europe. I'll be sitting down with the chief executive, Sergio Armotti. So what's the latest on the headcount and Credit Suisse's Swiss bank unit? There's a lot of questions that hopefully we'll have answered when they also report earnings tomorrow morning. So don't miss our interview, 7 a.m. London time, that's 2 a.m. in New York. Up next, Bloomberg Surveillance Early Edition with Simon Foxman in New York and Danny Berger here in London. And this is Bloomberg.
Middle of a massive exhibition center located on the western suburbs of Shanghai, where the annual car show is taking place. This is the first exhibition after the end of the COVID lockdown. We can feel a lot of excitement on the ground. Electric vehicle is going to be the new theme of the industry. Most of the European companies and Japanese car makers who are considered latecomers to the China EV party are launching their EV products. They are making their foray. intensifying competition in the market. For example, Volkswagen yesterday debuting their ID.7, which is electric vehicle rivaling the likes of Model 3, which is one of the best-selling product in China. And Mercedes-Benz, they are announcing the launch of their new super luxury model of Maybach, which is going to be a fully fledged electric vehicle priced at $200,000 each. Domestic players are also trying to maintain their lead in the market. BYD, for instance, unveiled its first luxury model called Yangwang yesterday. It's priced at about 1 million yuan. At the same time, it's seeking to gain market share in the mass market as well. Needless to say, attracting all the car makers to the Chinese market is the rosy growth prospect. Demand is surging. By some estimates, EV sales in China are on track to exceed 8 million units this year from more than 5 million last year. The future of the car industry is EV, for sure, no question about it. This is Charlie Zhu, Bloomberg News, reporting from Shanghai Auto Show.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
He's
story.
there, the kind of upside.
It's 10 a.m. in London, 5 a.m. in New York, 5 p.m. in Hong Kong. Our top stories today. Dialing back Fed wagers, the latest U.S. jobs and consumer data offer support to investors speculating the Fed is nearing the end of its tightening campaign. Meanwhile, a string of inflation reports from around Europe this morning will help the ECB judge whether to keep raising rates. A bellwether German state posts a surprise CPI jump in August, while Spanish inflation quickened again. And Hurricane Idalia rapidly intensifies into a dangerous Category 4 storm as it heads towards landfall on Florida's west coast. We're on the ground with the latest. Welcome to Bloomberg Surveillance. You're watching the early edition. I'm Danny Berger in London alongside Simone Foxman in New York. So Simone, the day after a jolt's jolt, the question will remain, is this a turning point or is it just really sensitive summertime light volume markets?
Yeah, and frankly, everyone's confused. UBS's Jason Draho calls this the Marketheimer effect, building on that Barbie Oppenheimer thing. The two incongruous events, essentially conflicting data, conflicting interpretations of exactly what's happening with the U.S. consumer, where we go with Fed policy. So we got this sort of negative news yesterday. We saw S&P future, we saw stocks rally, we saw bonds rally, but today we're reversing some of that trend. We're back at around 4,500 for the S&P futures, or two-year yields slightly higher, but not at that level that we saw, that 5+ level we were talking about just a few days ago. And the question really here, have we hit the peak in yields? Are we off that 5+% for good at this point? We're closely watching the yen here, the dollar strengthening. It's very, very close to a record against the yen that we haven't seen since late last year. Also watching oil. A couple things going on here today. A seeming coup in Gabon, soldiers overtaking the country's government just days after a disputed election. We're also, of course, watching the impact of Hurricane Idalia on some of those energy assets in the southeast, Danny.
Simone, I got some breaking lines to bring us more European data hitting the tape. This one for Euro area, August economic confidence coming in just ever so slightly weaker than expected, 93.3. The estimate was for 93.5. We also have had the final reading for August consumer confidence come in bang in line with what we saw in the preliminary reading. That is a -16. I should also note we just had industrial confidence come out for the Euro area too. That is significantly weaker than expected. Not surprising. surprising considering what PMIs did earlier this month. But it's notable that Europe has a problem not just with industrials, but with services too. Both fell into contractionary territory. We're going to be talking about all that data with Maria Tadeo shortly, because we've got a whole lot more coming this week for the euro area. Now, the reaction in terms of the bond market was all based on around 6:30 a.m. this morning, London time. We had North Rhine-Westphalia. I always mess that one up, but it's a big region in Germany. I apologize to all of our German viewers for me butchering that. But we did see inflation really quicken up here for that region. That was the immediate reaction we saw in the German two-year yield, and it's mostly held on to that, about 5 basis points higher. European stocks perhaps trading some of that stagflationary fear. We are looking for the first down month for European equities for the first in 3. And the euro, look, perhaps it's troubling that you have historical yields are higher, yet the euro is weaker. It's weaker by a 1/10% versus the dollar. So, Simone, the euro at the moment really trading more so on the growth story than it is the rate story, than it is the yield story. The ECB, it is priced into hike where the Fed is not, Simone.
Yeah, that's right. And I mean, we have this higher than anticipated inflation in Germany and the like, and then also the flagging consumer confidence there. And it is a big week for European data as the ECB gets its first glimpse of key data ahead of that September meeting. Spanish inflation, again, rising to a 3-month high. Regional data trickling in from Germany, also indicating an unexpected rise in prices. Here to break this down with us, Bloomberg's Europe correspondent Maria Tadeo. She joins us from Brussels. Okay, Maria, a whole string of European data this morning. What does it tell us about the inflation story first?
Yes, and look, we know now every data point matters, so we need to look at every data point that we get out of the euro area. And look, we have 2 so far. One is obviously coming from Spain, which sees inflation in line with expectations, I should note, at 2.4%. But nonetheless, when you compare it to the previous month, and that matters in terms of the trajectory, over time, you did see an uptick from 2.1 to 2.4%. The core inflation number in Spain, it was stable. But again, remember, what the European Central Bank wants to see, particularly, especially when it comes to core inflation, is a sustained deceleration, declines that shows or really proves the monetary policy is now really fitting into the economy. Now, when you look at Germany, we started on that note from North Rhine-Westphalia. It is a hard name to pronounce, Danny, so we've got to cut you some slack on that front. But, you know, we should also be kind at times. But look, it started on this upward surprise on both the monthly but also the annual reading. We've seen a couple of other regions trickle in anticipation of the German CPI data, which show maybe the number. There were risks of an upside surprise to the CPI. Maybe that comes in more balanced. Overall, of course, we're still waiting for this German CPI, which economists, before that North Rhine-Westphalia hit came out, expected would show a decline, so a cooling down in Germany. Now, you have to put all of this together with the rest of countries that we're expecting are set to report their numbers for August, and obviously the euro area number, which should put this now on a bigger context for the European Central Bank. But again, this matters because this is really the final data point, especially when it comes to inflation, that the European Central Bank will get before they make their deliberation in September about that rate decision that is coming up.
Maria, may I first say you are way too kind to me. My problem is that it has both north and west in it, and I just keep wanting to say northwest, but it's not that. It's North Rhine-Westphalia. It is hard. Thank you, Maria. Again, you're too kind. Look, okay, in 2 weeks' time, you're going to get on a plane. You're going to head to Frankfurt for the ECB decision. What does this change for it? Does it change anything for them at this point? Do we move in either direction?
Look, in terms of the European Central Bank, and you're very right to highlight this, because there is now an open debate that was introduced by the central bank itself. It went from being almost an autopilot to hike, we need to hike, to now let's take a reassessment, go back to being very data dependent and look at every data point to potentially now introduce a hike, but also a hold. So that is the state of the debate. Danny, in terms of the data that we get now, the question for the ECB at this point is not whether inflation is cooling down. We know that it is cooling down, especially, Danny, if you compare it to a year ago, if you look
at the records, at the near records that we were seeing across the euro area, it is obvious that the monetary policy is feeding into the economy. But the real question, and this decision will hinge entirely on this question, is whether or not there are signs that inflation is cooling down sustainably back to target that merits a pause. That is the whole core of the argument. I think overall, if you do get data across the region that shows it's either stable or actually there's an uptick, you could argue there's a case for a September hike.
Maria, thank you for breaking that down with us. Bloomberg's Maria Tadeo out of Brussels. Now, Hurricane Idalia is building strength in the Gulf of Mexico, heading towards landfall on Florida's west coast, where it threatens to unleash floods and trigger blackouts. President Biden spoke about the government response yesterday.
We're worried about the surge, the ocean surge. We don't know exactly yet. It's hour to hour we're watching this, but I told the governor that, and the mayor, and the regions that are likely to be hit first, that we're there as long as it takes. We're going to make sure they have everything they need.
ABC News reporter Em Nguyen joins us now from Tampa, Florida. What do we know about where exactly the storm is expected to make landfall and when, and just exactly what the impact could be?
Right, so a few things to break down here, Danny and Simone. Right now, we understand here, at least in Tampa, the winds are starting to pick up at about 50 miles per hour. Overnight, there was heavy rain in the area. The hurricane of this strength has never made landfall in the northwestern part of Florida, and there's even a tornado watch in effect for the state until 6 a.m. This, of course, as Hurricane Idalia barrels towards Florida's Gulf Coast, expected to make landfall just north of Cedar Key, that's just south of Tallahassee. And the hurricane strengthened over the Gulf of Mexico, threatening to unleash catastrophic storm surges and rainfall. Now, Fort Myers Beach, just south of here, is already flooded. It's the same community devastated by Hurricane Ian last September. And Governor Ron DeSantis warned people in these areas, announcing that more than 20 shelters are open and more than 1 million gallons of gas are available if needed. Overnight, people in at least 30 Florida counties were placed under evacuation orders. Residents actually chose, some of them, to hunker down. They boarded up their windows and filled those sandbags. They got water at the grocery stores. Now, Tampa Electric actually secured tens of thousands of workers from more than 20 states as far as Maine to help restore power after the storm. 5,500 National Guardsmen are also on high alert. And as President Biden will be receiving a briefing on Idalia today, FEMA is already calling on Congress to approve more funding for disaster response. Of course, we're also looking very closely at those storm surges, which could be life-threatening. They could go up to 16 feet in some areas, and it adds to the increasing flood threat here and along the coastline. Danny, Simone?
We just moments ago, 10 minutes ago to be exact, we had this upgraded from a Cat 3 to a Cat 4 storm. What difference does that make in terms of impact when it makes landfall to now have this be a worsening type of environment?
Exactly. So a Category 4 storm, and when it's actually compared to a Category 3 storm, that means higher winds. It could be potentially devastating for the coastline of Florida. This means downed power lines. It could be intense flooding in some parts.
All right, I think we might have just lost Em's feed there. We really appreciate her coming on for us. I hope she stays safe there as she reports in Tampa, Florida. That's ABC News reporter Em Nguyen. Thank you so much. Now, we're also watching Treasuries this morning after bigger than expected declines in job creation and consumer confidence prompted traders to sharply dial back bets on a September hike. Let's get over to Bloomberg senior markets editor Phil Serafino on this. Phil, it was remarkable to look at the market reaction. The dollar immediately crumbled, stocks shoot higher, yields, we get this rally in bonds too. How much of that can we chalk up to summer markets versus this actually being a change, a corner turned in a weakening labor market?
Well, it does feel like sentiment really has shifted in the bond market and also in the stock market just in the past few days. You know, you go back a little more than a week and a half ago, Treasury yields were at a 16-year high. the market was very preoccupied with the fact that there was a big flood of Treasury issuance coming. The Fed was going to keep rates higher for longer. And that has all sort of turned around a little bit. And that report yesterday on JOLTS really helped. But you go back to Jerome Powell's speech on Friday. There were no surprises from him. He says, hey, we're going to be watching the data to decide what to do. And the market sort of took that in stride. And now investors are sort of looking at the glass as being half full. Treasury yields have come down from, those 16-year highs of just 10 days ago, and now they've pulled back considerably. So it feels like investors really are sort of taking the benign view that the soft landing is coming.
We saw several rallies last year on the expectation that the Fed would pivot, go to a pause, or even potentially cut rates at some point in the future, signal its willingness to do so. Do we think this one is going to last this time?
Yeah, it really does depend on the data because Powell and other Fed speakers have made clear if they see signs that inflation and inflation expectations are not coming down, they won't hesitate. It feels like the market is pricing in a pause at the September meeting. Beyond that, again, and we'll get the jobs report on Friday. It really does matter what the data shows, but the market is setting up, both stocks and bonds are setting up for a very benign environment where the Fed goes onto a pause and inflation cools down. So all eyes on the jobs report and any inflation data that comes out over the next couple weeks.
Yep, Jerome Powell at pains to say that they're data dependent, so we must be too. Phil, thank you very much. Bloomberg's Phil Serafino. All right, we're going to be discussing China's economic slowdown coming up on the program. We're going to be speaking with Hao Hong, chief economist at Grow Investment Group. He's known for his outspoken views on China's financial markets and the economy. A conversation you don't want to miss up. But first, coming up, we're also going to be speaking with another expert. It is Josie Anderson of the Center for Economics and Business Research. This is Bloomberg.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
On the next episode of The Circuit.
And I've heard you say you were really motivated by the fact that a lot of people didn't think you could do this.
I think even today I'm underestimated. And I think even today Bumble is underestimated in terms of what we can be and what we can do in the world.
Watch The Circuit now on Fire TV channels.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Simone Foxman is in New York. Now we have a big earnings result tomorrow. It's UBS and investors are bracing for a record quarter as a Swiss lender prepares to unveil the first quarterly results since taking over Credit Suisse. Joining us now is Bloomberg finance editor Tom Metcalf. Tom, I'm going to be completely honest. I thought it already happened. I mean, we literally already know so much. When I came in this week and looked at the calendar, I was like, huh, that's interesting. I mean, is there anything new that we might learn this time around that they haven't already told us?
Well, there's certainly be a lot of detail out there, which we're really looking forward to getting. And I think it's a fair point to think it might have already happened because these results have obviously been delayed,
That's
right?
Kind of you, Tom.
So, no, this is as late as I can remember a Q2 for a European bank. So going right up to the end of August, obviously. But no, I mean, there's been a steady drip feed of sort of what the plans are. I think for me, the interesting thing is what gets confirmed at this set of results. So obviously we've been reporting that, it's likely the Swiss unit of Credit Suisse will probably be absorbed fully into UBS, expecting that maybe to get announced. But also then, on the job cuts that we know about, what they might be doing with the investment bank. Just be really interesting to hear what the executives are saying now they've sort of been able to run the rule over most of Credit Suisse.
Well, UBS decided to voluntarily give up sort of a safety net from the Swiss government. How does that play into the results we're going to hear?
Well, I think that's really interesting in that basically, our understanding is that gives them a lot more freedom, that gives them a lot more ability to effectively, make those tough decisions, perhaps more job cuts than the Swiss government would have been sort of comfortable with. And of course, the discussion around the Swiss bank, it's very much now a sort of, seen as a private market transaction, and that giving up of the backstop has very much helped kind of any political sort of backlash that, was definitely resonating after March.
I've got kind of a technical question for you, because this is obviously going to be the first set of results where they're consolidated, that it's UBS with Credit Suisse in it. What will that actually look like? How do they present Credit Suisse's results within the bigger picture?
Yeah, as a former accountant, it sort of fills me with terror how they're going to... Yeah.
Tom,
so this would be a very painful... Yeah, I know. But this would be a very painful task to put together two banks. But no, I think actually in terms of what the results that will be released will actually be fairly top level, fairly high line. So it might just be as simple as, a single section on Credit Suisse and perhaps a very few line items. So, what revenue is, what the assets are, all very key to investors, but I'm not sure it will necessarily be that easy, even as you drill down into the results, to see sort of effectively Credit Suisse as a single entity anymore.
It's such a great view into your mind, Tom, to hear what keeps you up at night. Consolidated earnings results. Tom, thank you so much for all of that. That is our finance reporter, Tom Metcalf. And we're going to be covering UBS for you tomorrow. Francine Lockwell will be speaking with the CEO, Sergio Armati, on Bloomberg TV tomorrow. That will be 2 a.m. Eastern Time, 7 a.m. in London. Coming up on this show, the crypto industry gets a landmark U.S. legal win in its push to launch a spot Bitcoin ETF. That's next. This is Bloomberg.
Ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think of myself as a realist, trying to see the world as it really is and not the way I'd like it to be. And sometimes I succeed and sometimes I fail in that.
The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now.
You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China, nothing comparable to that ever. That's why the heat records are broken every year, and we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
Good morning, good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open. Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. The top names in business are on Bloomberg.
We're seeing a resilient consumer out there. We're also seeing consumers premiumize, and what we mean by that is consumer habits are changing. People want to drink better, not more, but higher quality spirits. And so, look, it's been a bit of a balance this year, battling inflation. At the end of the day, we see volumes growing back over time.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Simone Foxman is in New York. Grayscale won a key legal battle in its push to launch a spot Bitcoin ETF. The ruling brings the U.S. crypto industry just one step closer to tapping billions of dollars from everyday investors. Bloomberg's Kaylee Lyons has the details.
Grayscale has moved closer to launching a spot-based Bitcoin ETF in the U.S. in what is potentially a watershed moment for the crypto industry. A D.C. Circuit Court handing them a victory when a 3-judge appellate panel overturned a decision by the SEC to block the ETF. They said in the ruling, this is a quote, "The denial of Grayscale's proposal was arbitrary and capricious because the commission failed to explain its different treatment of similar products. In the absence of a coherent explanation, this unlike regulatory treatment of products is unlawful." Basically, they're poking a hole in the SEC's argument that a futures Bitcoin ETF, which already has been approved in the U.S., should be treated differently than a spot-based product. That is something the SEC has said because of fraud and manipulation, and yet it doesn't seem that this court is buying that argument. Now, this is not to say that GBTC, the Grayscale Bitcoin Trust, is going to convert into a spot ETF tomorrow, but it is still a big moment in that direction. This now goes back to the SEC, and they do have some recourse here. The SEC, through a spokesperson, said in a statement to Bloomberg, "We are reviewing the court's decision to determine next steps," and they still could fight this. They could ask the full D.C. Circuit Court for a review. They have to do that within the next 45 days, though our litigation analyst here at Bloomberg Intelligence, Elliot Stein, has said he doesn't think that would yield any kind of different result. There is also the ongoing question about what this means for other spot Bitcoin ETF applications that have been filed. None have ever been approved in the U.S. to this point, but we have seen a wave of them recently from the likes of BlackRock, WisdomTree, Valkyrie, and others. And it's a question how this ruling in the D.C. Circuit Court on Tuesday makes a difference, ultimately, in the spot ETF race here in the U.S. In New York, Kaylee Lyons, Bloomberg News.
Don't miss our interview coming up later today on Bloomberg Markets with the CEO of Grayscale. That's at 10:45 a.m. Eastern Time. Now, Simone, the other regulatory-related story we're looking at in the U.S., you flagged this to me yesterday, that Medicare list of companies that can now negotiate on some of their pharma products.
Yeah, this is a very controversial plan from the Biden administration, and yesterday they identified 10 drugs that they intend to negotiate on in terms of pricing for Medicare. But spin this story forward. Today, there's a great story out on the terminal about whether or not a GLP-1 drug, Ozempic, created by Novo Nordisk, could be next. This is a diabetes drug. This is the diabetes version of the drug, but heavily associated with weight loss and costs about $1,000 a month. So enormous costs, potential savings as well for Medicare.
My favorite thing about this New York Times story, Ozempic is so massive for the Danish economy that it means less rate hikes. Wild stuff.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power in the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time? Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
From New York City,
in London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
He's
story.
there, the kind of upside.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg Surveillance Early Edition, and here's what you need to know. Dialing back Fed wagers, the latest U.S. jobs and consumer data offer support to investors speculating the Fed is nearing the end of its tightening campaign. Meanwhile, a string of inflation reports from around Europe this morning will help the ECB judge whether to keep raising rates. A bellwether German state posts a surprise CPI jump in August, while Spanish inflation quickened again. And Hurricane Idalia rapidly intensifies into a dangerous Category 4 storm as it heads toward landfall on Florida's west coast. We're tracking the very latest. I'm Simone Foxman in New York with Danny Berger in London. Danny, so much data, so few people in the office, and so much room for volatility, it seems.
I know there's what, like 10 people trading this market right now. I mean, it makes for an interesting story for us to go through, if anything. I mean, the reaction yesterday was really stark. Dollar folds, bonds jump, stocks jump. How much of that is sustainable on light summer trading?
In Europe, we're reacting to the North Rhine-Westphalia data out of Germany. Finally got that one. 6:30 a.m. is when it hits the tape. It's usually one that we do end up trading off. It's seen as a bellwether for the entirety of German CPI. We're going to be getting that in the week, so that is not a data point for us today. But in the meantime, yields heading higher by 5.5 basis points for the front end of the German curve. European stocks, those fall, headed for a monthly decline, the first in 3. And the euro, in just the past few moments, it flipped to strengthening versus the dollar. We're flirting with 109 on euro dollar. The initial reaction was to weaken, which was concerning. Perhaps the market more concerned about the economic story than the inflation story. Are we seeing the opposite of that now, or are we just seeing confusion in summer markets, Simone?
Yeah, and confusion reigns in the United States as well. You mentioned that strong risk-on reaction in stocks yesterday after some of that disappointing data. We're seeing a little bit of a reversal there, down about 1/5 of 1%, but yields retracing some of their decline yesterday, seeing yields rise now 491 on the 2-year. Is that the highest we go, though? Have we seen the highest we go in the 2-year yield? It was over 5% earlier this week. We are tracking that closely. Also tracking the U.S. dollar yen. This is a number close, 146.30, close to a record high for the U.S. dollar against the yen since late last year. Where do we go with that, considering some of the weakening data we're seeing out of China? And of course, we're always tracking Brent crude very closely, 85.90. Some of this on a coup going on in Gabon. Of course, that's an OPEC member, very small OPEC member, just 200,000 barrels per day. But another coup in Africa, as well as the impact of Hurricane Idalia on the southeast. Danny.
Well, Simone, as you've been talking about today, I mean, it's a really big week for data, a big week for European data, too. The ECB is going to get its glimpse of key data ahead of that September meeting for the first time. We've already had inflation out of Spain. That rose to a 3-month high. Regional data, that's also been trickling in from Germany, indicating an unexpected rise in some places, not so much in others. Look, it's complicated. And to try to assess that, with us is Josie Anderson, managing economist at the Center for Economics and Business Research. Josie, perhaps hard to get like an exact read based on the data we've had so far today. Tomorrow we'll get more. Where do your expectations lay?
I think tomorrow we are still expecting a deceleration in inflation across the Eurozone to around 5.1%. But the thing is that masks a lot of variation across the member states. And I think we're reaching an interesting point, actually, because we've had a large base effect for several months now, resulting from the fact that there was this huge energy price spike last year. And so we've been seeing deflation in that energy metric for several months now, which has been having a big impact on the overall headline rate. But actually in some countries, for instance, Spain, where we have data, it has started to see an acceleration in inflation. But now that's quite a low rate in Spain, with the latest data coming in around just above 2%. So it's back towards target, but starting to rise again. And I think that's interesting because we might see that base effect from energy prices, which spiked last year, start to drop out. Food price inflation is still high, but is decelerating. So that's another dampening factor. But these are quite volatile factors. So after they come down, we're left with core inflation, which is also expected to decelerate tomorrow. But interestingly, in the latest data, services inflation, which is also watched very closely, did accelerate. So I think a big question tomorrow is, are we going to see services inflation accelerate again? And if it does, that might leave concerns about longer protracted inflation above target.
What in the world does the ECB do with that? That is so fragmented and so many divergences depending on where you look.
Yeah, exactly, because some member states still have very high rates of inflation, in particular Slovakia, where it takes a while for high energy prices to pass on to consumers. That's still seeing above 10% inflation. So it's got to balance that with somewhere like Spain, which is seeing lower inflation. So I think there is still a possibility of a hike in the September meeting. It does depend a lot on the data tomorrow and what else we see come out before that meeting. After that, I think it's likely that they'll stop hiking because, yes, now we're seeing inflation come down in lots of countries and fears about the wider economic impacts of high interest rates for a sustained period and what that will do to economic growth.
Yeah, and you can see from the swaps market's roughly divided on exactly what's going to happen in that September 14th meeting for the ECB. I want to take you across the pond, though, because we heard, again, the message from Jay Powell, data dependent, data dependent, data dependent. When are they not data dependent? But take me through your expectations, both for September and then beyond. Are we going to see that pause here next meeting? I believe that is what markets are expecting in the U.S.
Yeah, exactly. So markets are very much now expecting no hike in September, with that jobs data coming in recently quite soft. And we'll get the non-farm payrolls data on Friday, and we'll see how that affects things. I think in September, we are very likely to see a pause, no hike. After that, I think there is still a possibility of a hike. Later today, we're getting the confirmed second estimates of GDP growth in Q2, which came through quite strong. The latest retail sales figures, for instance, were up 0.7% in July, which is quite strong. And we're still forecasting 1.5% GDP growth in the US this year, down slightly from 2.1% last year, but still relatively strong. So I think if the economy continues to show signs of strength, then there is the possibility of another rate hike in order to get that inflation low and staying low.
Yeah, so if we get that rate hike further down the pike, push it off past September, does that increase or decrease the prospects of a soft landing versus a hard landing?
I think we're seeing more and more signals of a soft landing, with these figures coming through fairly strong, like the GDP growth I just mentioned, and the fact that inflation is now slowing back towards the target that the Fed want. But the question is, and Powell is definitely signaling that rates are going to stay high for longer. Over the slightly longer term, will that lead to more impacts on businesses which can't borrow, consumers which can borrow less? Will that lead to more impacts down the line, particularly if rates stay high throughout 2024? And I think we'll start to wonder when are they going to cut, obviously, which people are starting to debate now already, just because we might start to see, weaker economic growth. But I think for this year, the US economy is really holding up. And as I mentioned, we're still expecting relatively robust growth, which points to a softer landing.
Yeah, I guess for businesses that have been preparing for a recession for so long, I mean, if we continue this possibility of higher rates in the future, how does that change our calculus? Josie Anderson will check in with you to get more on that as this develops. Josie Anderson of the Center for Economics and Business Research. Now, coming up, we turn to China and discuss the economic slowdown with Hao Hong, chief economist at Grow Investment Group. That's up next. This is Bloomberg.
Knife making is almost meditative for me. There's a lot of passion behind it. There's a lot of hard work behind it. And it's not just something that you kind of just brush off like, oh, this is just a knife. People's hands touch this knife. People pour their passion and their soul inside of these products.
The art of blacksmithing has a very long history.
our notion of what it means to be civilized is to have metallurgy, to have the ability to transform the natural world.
When somebody used my knife, I want them to say, damn! Golly, this is a badass knife.
The top names in global leadership are on Bloomberg.
When the dust settles, Israel will not only will remain a democracy, it will be even a stronger democracy, but more importantly, it will not in any way impair the enormous business and economic capabilities of Israel in the new technological age.
Nobody covers the top global leaders like Bloomberg Television and Radio, your global business authority.
Now, perhaps the biggest economic story we're watching right now in China. And despite a 5.6% decline in the CSI 300 so far this month, we are watching record in monthly inflows into China's largest stock-focused ETF. Now, that's only been trading since 2012, but we're watching about $4.4 billion worth of inflows so far in August. And of course, as you can see, shaping up to be the biggest month on record. So are investors just buying the dip? Joining us now to discuss is Hao Hong, chief economist at Grow Investment Group. I should say he's known for his outspoken views on China's financial markets and the economy. Hao, explain this for me. Why are we down 5.6% in this main index, but yet we're seeing investors pile in?
Yeah, well, I think people are in general disappointed by, the pace of policy announcements that is coming out from the top, right? So, every one of us is waiting for a huge, big bang announcement, some sort of bazooka policy to, to ease monetary and also fiscal expansion as well. But we're not getting that. Instead, we're getting piecemeal policy bit by bit. So I think as a result, the market is likely to be disappointed. But then at the same time, because the sell-off has been like so severe that now the Chinese market has declined to one of its lowest valuation on record. I think that is the reason why I think lower valuation is attracting foreign investors to come into this part of the world.
So we've seen some of these support measures happen, but of course not that big bazooka that investors, I believe yourself included, were looking for. I mean, is that still in the cards, or are we just going to have to make do with these piecemeal measures from now on?
It remains to be seen, to be honest. Because normally when they cut stamp duty, it's a very strong policy signal coming from the top, basically saying that, they really want to shore up the confidence and also shore up the market and the economy. So, normally, it is a sort of a pre-announcement of, what is to come in the coming months. So I think many of us are still remaining hopeful. And also last night, as you can see, they announced a cut on existing mortgage, to make it easier for people who has already borrowed to buy homes, to buy even more homes. And also, today in Guangzhou, they are easing the lending standard once again. And Guangzhou is a key tier 1 cities in China. So I think, there are many things going on. I think what is lacking this time around is that, we don't really have a number to work with. Back in 2008, they announced a 4 trillion yuan stimulus package. Back then the GDP in China is like 40 trillion yuan. So it's like 10% of the GDP in one go in a stimulus package. But this time around, we're not, seeing a concrete number that we can work with.
I mean, that's fair because, especially for those living in Western countries, the kind of traditional Keynesian stimulus that we're used to, it is things like direct transfers to households. I want to read you a quote from Wall Street Journal reporting on Monday and get your take on it, because I found this interesting. They wrote, Xi Jinping has deep-rooted philosophical objections to Western-style consumption-driven growth, people familiar say. Xi sees such growth as wasteful and at odds with his goal of making China a world-leading industrial and technological powerhouse. What does that mean for where we go? If there are ideological objections to things like that Western consumption-driven type growth?
Well, I think, we're hearing the top, wanting to stimulate consumption, especially this year. Exports has been down rather substantially. It's a reflection of weakening foreign demand, and that is part of the economy that we have no control. Right. So even though a weaker currency can help improve the competitiveness of the Chinese exports, but foreign demand for Chinese goods are down this year. So I think in terms of philosophical difference, since we are trying to stimulate consumption, and I think Chinese households at this juncture really need some help. I think handing out consumption coupon or even some cash for the Chinese household is actually one of the better ways many of us are seeing, but then we're not getting it. So I think we're actually hearing that the idea is being vetoed by the top. So no one's really sure what's going on.
How are you still buying bonds, Chinese sovereign bonds? Last time in May we spoke, you said you're buying them. You're right on. The rally continued. Will it continue further?
I think so, because as you can see, the danger for deflation and also the deflationary pressure is still on. And if the Chinese consumption is not catching up, and also Chinese investments continue to trend down because the property sector is still ailing, then I wouldn't be surprised to see long bond yield in China actually making a new low for its entire history. So in this kind of environment, because of the risk aversion and also because of the outlook for deflation, it probably pays to have some bonds in your portfolio.
Well, the latest news, How, is that Country Garden will issue $34 million worth of shares as it attempts to dodge default. Can it truly dodge default? And then does this turn into a systemic issue?
Yeah, I don't think it can dodge. I think technically it's already defaulting on many of the payments on its foreign bonds. And I think what's different at this time is that, the defaulting on the US dollar bonds, which is probably not a usual sort of a default pattern. Normally they make it a priority to pay off the US dollar denominated bonds. So I think even though they're issuing $34 million US dollars worth of share, it's just piecemeal. It's not enough, nearly enough to cover 2.4 trillion yuan they have in liabilities. So I think it would be very, very difficult to avoid a default for Evergrande and also for Country Garden as well. But I think in terms of a systemic risk, it is slow grinding, right? So many of us are very aware of such risk because the amount is just so huge. So waiting to see what sort of solution can be had from the top.
Interesting. Hao Hong, thank you for joining us. Hao Hong of Grow Investment Group with a reality check for Country Garden and China. Coming up, Hurricane Idalia strengthening as it heads toward landfall this morning. We'll discuss the possible damage and financial loss. That's up next. This is Bloomberg.
One of the ones we're working on at the moment is how do we charge back into Ukraine as soon as the European authorities say it's safe to fly in Ukraine again. Now, nobody knows when that is going to be. But we were Ukraine's second largest airline when the Russians invaded on the 24th of February last year. We would be Ukraine's biggest airline the week after they tell us it's safe to go back in there, because we're going to charge back in there. Initially, we have a plan to open up about 30 routes from 4 Ukrainian airports back into the European Union. And then we want to, I think, within 6 to 12 months, open up 3 or 4 large bases in Ukraine. And we're talking to the Ukrainian authorities about creating an environment, cost agreement, on which we could lead the charge of air travel into a post-war Ukrainian recovery.
The top names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Simone Foxman in New York with Danny Berger in London. Now, Hurricane Idalia has strengthened into a Category 4 storm heading towards landfall on Florida's west coast. You're looking at live pictures of Tampa now, where you can see winds increasing to 130 miles per hour as part of this storm. Not clear if that's quite that much in Tampa. Brian Sullivan, our Bloomberg weather reporter, joins us now to break down the impact. First off, Brian, tell me here, we're looking at, we've just seen the hurricane strengthen into a Category 4 storm within the last hour. Is the big concern the winds, the storm surge, something else, and where will it land?
It looks like it's a combination of the winds and the surge. With the strengthening, the hurricane strength winds are going to push all the way through Florida right into Georgia. So they're going to last a lot longer than they would have, and they'll do more damage to infrastructure such as power lines as well as houses.
So what will be the cost of that, Brian?
Right now, it looks like it's going to be a $10 billion storm, and that's because it's coming into a fairly sparsely populated part of Florida. A storm like this further to the south or maybe even further to the west would probably cost 10 times that.
Can you compare this to some of the other storms that we've seen come through Florida? Obviously, Florida hit by hurricanes year after year. Is there a specific other storm that this could mirror?
So in terms of its power, it's very close to Hurricane Ian, which struck much further to the south and actually cost $110 billion. That's what happens when it hits a more populated area. But it has the same kind of power that Ian had. It just is not hitting in such a densely populated area. It's also hitting very close to where Hurricane Michael hit, which was actually a Category 5. Again, didn't do as much damage as Ian because it hit that more rural area.
What happens beyond Florida, Brian? What are we expecting an impact for Georgia, an impact for South Carolina?
So the first thing we're going to see is a lot of power outages. There are about 60,000 people without power in Florida already, and the storm isn't even on shore yet. Those power outages will spread all the way through Georgia, up into South Carolina, probably into North Carolina. We'll see some damage to cotton crops, but it shouldn't be too bad. Fruits and vegetables will probably take a hit as well, but the big commodities like corn and soybeans should be fine, according to Maxar.
Yeah, I mean, talk to me about as well the energy impact. Whenever a hurricane hits the southeast, we worry that it will disrupt production, supply. How are we likely to see this?
So with this one, there hasn't been a big hit on production. It's on the eastern side of the Gulf of Mexico, and most of your offshore production, most of your refinery is done in Texas and Louisiana, which is, safely on the other side of the Gulf. What we will probably see, though, is distribution problems, consumer problems, getting gasoline to gas stations, for instance. I mean, we have seen in the wake of these storms, prices at the pump go up for a short time. So these are all things that could affect the aftermath.
Brian, about a minute here, but what do you make of what we've seen of this hurricane season as a whole so far and where it's likely headed?
It is fairly active. I mean, we've had, I want to say, 10 storms so far this year already. They haven't been big storms. They haven't been truly powerful storms. Adelia here in Franklin, which is also out in the middle of the Atlantic right now, have been the two biggest storms so far. People going into the season were expecting kind of a light season because there's an El Nino in the Pacific, but the warm water across the Atlantic is really going to be driving these storms for the next few weeks, and we haven't even reached the peak of the season yet.
Well, Brian, we hope you will continue to help us parse through this as we head further into hurricane season. Bloomberg's Brian Sullivan, our weather reporter there. Thank you very much. Now that's it for early edition surveillance. Coming up ahead as we look at some red on the screen in the equities markets. We're looking at two-year yields trading around 4.9%. That's it for us. This is Bloomberg.
City, a $100,000 salary feels like just $36,000. That's according to a new study that looks at 76 of the largest U.S. cities to see where $100,000 goes the furthest, after taxes and after accounting for the cost of living. For many, reaching a six-figure salary is a huge moment when you feel like you finally made it. But that feeling may not last long when you realize just how much taxes and the cost of living in an expensive city takes out of your paycheck. And that's especially true after 2 years of inflation. Hybrid and remote work have opened up so many more opportunities for people to choose where they live. So that forces the question, should I stick it out in an expensive city or try to find somewhere more affordable? So where should you live if you want to maximize your salary? Consider Memphis, Tennessee. The home of the Blues topped the list with a take-home pay of about $86,000. Tennessee doesn't have an income tax, and the cost of living there is about 14% cheaper than the national average. So a dollar there takes you much further. Texas is another popular choice, and it's clear why. 7 of the top 10 cities where $100,000 goes the furthest are in Texas, a state known for low taxes. Of course, there are so many factors that influence where you choose to live. You may want to be at the center of things, or be near family, or be somewhere where there are a lot of career opportunities in your field. It's not always just about dollars and cents.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Everyone's still data dependent, and everyone's still basically concerned. We really don't know where we're going.
I think the trend in global rates is still up.
I think everyone's been surprised that we've been so resilient up until this point.
I think we're in a pause period now, but I suspect we'll have a strong fourth quarter.
The bar for a rate hike in September, I think, is pretty high.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene. I'm Jonathan Ferro, together again this morning with Katie Lyons. Your equity market just about negative on the S&P by 0.2% on the S&P 500. Busy start to Wednesday on hurricane watch down in Florida. We'll catch up with our meteorologist a little bit later this morning, about 30 minutes from now. An ADP report just around the corner this morning as well. And Tom, we've got a question. I've got two. Based on the data of yesterday and this morning, have we shut the door to a Fed hike later this month? Have we opened the door to a Fed hike on September 14th, or rather an ECB hike over in Frankfurt, Germany, Tom?
I said yesterday to myself, and I never do this, boom. That report yesterday to me was a sea change. I went and did some fancy math this morning on the JOLTS survey, and on the vector of an improving survey in terms of the stock market, the JOLTS survey, fewer job openings, is 3.3 standard deviations. We're almost out to the secret. +2 to -2 standard deviations. Yesterday was a sea change day.
JOLTS down, job openings down, quits down. All of that coming together, consumer confidence soft.
But just a Fed outlook.
Big rally in the Treasury market right across the curve, particularly on the 2-year.
Somewhat continues today. You don't see it in the equity market right now. Futures -7. But, John, you got to come in on the real yield where I've been looking. You're down to 1.83 from a 1.92. You're in almost 10 basis points. Again, I'm going to say this. Yesterday was boom. It was a sea change moment.
Katie, I said if we close the door to a Fed hike, if we open the door to an ECB hike based on the inflation data we've had so far this morning.
Yeah, an acceleration in Spain and in Germany. The specific state of West Rhine-Westphalia also seeing an acceleration in inflation. I took 4 years of German in high school, and we studied the map of Germany, Tom, including all of the states. But it all points to inflationary pressures underlying in Germany. That could mean that the ECB does theoretically have to make a move. If we're talking about inflation tomorrow, which looks like it could be in the ballpark of around 5%, we're more than double target.
Where's the inflation tomorrow in Europe? What report do we get in Europe?
All euro area.
All euro.
It's a big 24 hours.
It's day 3. Katie's sick of you already, TK. Day 3. Day 3.
Can
I
I
found
get
that
some
way
love?
about halfway through day 1.
back-to-back orange bow ties on today for
What's
the
that
Cavaliers.
about? I noticed that this morning.
Cavaliers are playing Tennessee, ranked number 12th. Cavaliers are going to win late in the game when Gagner's going to pop that ball.
Are they Tennessee colors or Cavalier?
They're both.
Colours?
Confusion.
Both. Okay.
Confusion. The people from Knoxville are orange as well.
So you're sitting on the fence?
No, I'm all UVA here. They're the underdog. When you're that
Would you
bad
say
in
go
football.
Who's?
Go Who's.
Where does that come from?
That's what you said.
Would you say go Who's?
Do you know where Charlottesville is? It's like in the middle of nowhere. I was going to give a speech there, and Jeremy Grantham offered me his airplane to go give the speech at Darden because it's truly, am I right, Kaylee? It's truly in the middle of nowhere.
Central Virginia.
Yeah, like in the middle of nowhere.
Nice little enclave.
Yeah.
Did you accept that flight?
No, I did not.
Because you shouldn't accept those
I know,
flights.
I shouldn't
It's
accept. I had to get it
important.
cleared through Bloomberg, and
it's very important.
I decided not to get on that private airplane.
Futures on the S&P 500 negative this morning by 0.16% on the S&P 500. In the bond market, yields a little bit higher by 2 or 3 basis points, 414.72. In the FX market here, Kaylee, the euro just a little stronger, 108.86.
Yeah, looking ahead to September for the ECB, but we have to look ahead at what is to come for the rest of the day as well. You mentioned it already, John. 8:15 a.m. Eastern time, we get ADP data for the month of August, looking at 195,000 as the estimate. But how much really should we be paying attention is the question, considering in July, ADP came in at 324,000, and actually non-farm payrolls came in at a lighter than expected, 87,000. So it's just to underscore, this is not a direct predictor of what the payrolls report will look like come Friday. Then at 8:30 a.m. Eastern time, more economic data coming down, GDP, personal consumption. We are expecting that second print of second quarter GDP will remain unchanged at 2.4%. But of course, that was stronger than anticipated. This is your chart going all the way back to 2006, Tom.
Well, this is important.
On
A
personal
statistician,
consumption.
Amy, came up with this chart. It's a killer chart because for those of you on radio, it shows consumption barely nudged off the 07-08 banking crisis. In the pandemic, it got slammed. Amy came up with it.
It's a wonderful chart, and it just kind of speaks to the idea that, yes, we have seen consumption, but now that savings pile is dwindling, almost entirely gone. And in the confidence data, you see that people are really feeling the effects of inflation, maybe a little bit less confident about the labor market prospects as well. Then finally, 10 a.m. Eastern time, pending home sales. This is where we're looking for the impact of mortgage rates north of 7% to show up. We've talked at length about this, especially in the existing home market. No one wants to let go of a rate they have that is less than 7%, something in the ballpark of 3 perhaps, and given given that this is tied more so to existing home sales, we are expecting to see a deterioration in that pending home sales figure, John.
Did you see in the consumer confidence numbers, Katie, the amount of people planning a vacation?
Yes.
I thought it was pretty interesting.
I missed
that. We'll talk about it a little bit later, but I'll share it with you now. Nearly half of consumers in August were planning a trip in the next 6 months, the highest share all year. Now, Katie, is that because they've seen photos on Instagram and they're like, I'm going to plan a vacation?
FOMO culture?
Or do they actually have the means to plan a vacation?
I think this is a good question because in theory, yes, you could put it on a credit card. We are seeing debt actually moving higher. If it's not actually cash you have to spend, but maybe it is a little bit of FOMO culture. Also, are we still seeing the pent-up demand from the pandemic linger in that everybody's trying to get all the vacations out of their system they didn't take for several years?
I think the jury's out on this, but I think it's a really important point. Ed Bastian at Delta Airlines nailed this 2.5 years ago. I remember doing an interview with him, and he just absolutely nailed
Kirby as well at
boom.
United.
Yeah, and you know, to Kaylee's important point, it's a mystery 24 months forward if this sustains.
1 in 5 of them are going abroad, a record share in data going back to the 70s. I think it's Instagram. They're seeing those pictures of Italy and
I don't disagree.
Islands.
And also, there's this racket
I'm planning
where
to go away, but whether you're actually going to go away, and we'll talk about it.
I'm not planning to go away.
Katrina Dudley joins us now, portfolio manager and research analyst over at Franklin Mutual Series. Katrina, wonderful to start this morning with you. Let's start with the question we asked at the top of the program. Have we closed the door to a Fed hike and opened the door to a hike in the ECB?
I think we've closed the door to a September Fed hike. I think that one's fairly well shut and in the rearview mirror. We're now talking about 56% odds of a rate hike in November. That's as good as a coin toss. Going over to the ECB, we've always said that they've been behind the US, have been watching what the US is doing. They're also being data dependent, just like the US Fed. And I think that you've got another rate hike coming out of the ECB, particularly given what you've seen on the inflation side coming out of parts of the euro area.
Katrina, rule number one for me is the market is always out front, and the bond market is out front of the equity guessing that's out there. Yesterday, to me, was exceptionally important. The JOLT survey, the sea change there, we've seen it in the market. Do you believe that the markets get out front of economic data?
I think that the market anticipates the information that it has available to it, number one. And number two, the market has so many more tools available to it in order to process so much of this information. So I do think that the market is an efficient pricing mechanism. But let's take a look at some of the JOLTS data. We've always thought that the JOLTS number was going to be like the pressure release valve, and you were going to see that number came down as a way of adjusting to the new, to any type of economic weakness. And I think you're seeing a slight decrease in that. And people also focusing on that quit rate percentage. But have a look at it. And if you pull up that long-term chart of the quit rate, it actually isn't, it is still substantially above where it's been historically. So I don't think you're seeing a sea change in people's propensity to quit. And for us, that means that people are not only secure in their jobs, they're actually secure in their prospects of getting another one.
Okay, so maybe we're going from a labor market that is shifting from extremely tight to just really tight, and then it becomes a question of what is sufficient, Katrina, in terms of the thinking of the Federal Reserve. If you're starting to see some loosening, if you're starting to see inflation pressures easing but still above 2%, when are we going to realistically know if it is enough?
I think a lot of the inflation pressures are things that we need to be careful because a lot of them are lagging indicators. And I think that that's why the Fed is taking a pause here to wait for some of those lagging indicators to come through into the data. And I think by the end of this year, you're going to see inflation with a 2 print. I think from that perspective, it means that the Fed doesn't need to do much more because it's really fulfilling the mandate of keeping inflation at a manageable level while keeping the labor market fully employed. And as we walk around and we talk to corporates, they're not talking about significant layoffs. And that's the type of narrative that you would think you'd see. Corporate margins are extraordinarily high. And also there's a lot of policy support. It's not coming through direct transfers. It's coming through things like the CHIPS Act. It's coming through the IRA. And companies have got those mechanisms to help them weather any type of economic downturn.
Katrina, we saw the house price data yesterday up again for another month. Katrina, I'm just wondering, the housing market in this country now is so distorted from the record low interest rates of a couple of years ago and the 2-decade high interest rates that we face now. Is that something this Fed can and should ignore?
I think that the Fed can't ignore it. But when you've got a very tight labor market, you will see people able to move houses. And they'll do that for the job. And they'll do it with the idea that the increase in salary that they're getting is going to more than compensate them for the higher mortgage rates. In terms of the rest of the labor market, yes, I do think that people are going to be a little more stuck in place versus, much more mobile of a workforce. But you need to offset that stuck in place trend that we've always feared in the past against the fact that Zoom and other technologies are making it so much easier for people to be nomadic workforces. So I think that from our perspective, yes, you've got a very strong housing market. You don't have much new home supply. On the existing home supply, people are staying in their houses. And so I think that, things are starting to work themselves out.
The heritage of Franklin Templeton, Katrina, is the balance between value and growth. Is there growthiness right now in value?
I think in terms of value, where we're seeing value is in companies that can grow cash flow. And that's the big difference between a growth investor that's focused on revenue growth and the type of growth that Sir John Templeton spoke about, which is the growth in a company's cash flows. And that growth can come from so many different areas. It can come from reducing CapEx. It can come from improving margins. But that's what we tend to focus on. And we look at what the valuation of those forward cash flows is. And that's how we actually go about stock picking here at Franklin.
Katrina, thank you for the update from you and the team. Katrina Dudley there at Franklin Mutual. Off the back of some job openings data in America yesterday and regional inflation prints this morning over in Europe, a conversation about what happens at the ECB September 14th and the Federal Reserve later on next month on September 20th. An update I wanted to share with you all in the last hour from the US National Hurricane Center on Hurricane Idalia, strengthening into a Category 4 storm, heading to make landfall later on today, Tom. Maximum sustained winds reached 130 miles per hour. They're referring to catastrophic storm surge that could come a little bit later, TK.
Big numbers. I've lived this directly. There was a hurricane years ago called a Hurricane Bob, and I was in the absolute heart of it. And there was the storm surge. It was about the height of a hockey goal. And they're talking much bigger surges here.
Well, and of course, we have to keep in mind that this is going to be the first major hurricane to make landfall in Florida since last September, Hurricane Ian, which caused billions and billions of dollars in damages. And the flood insurance gap was really highlighted in the state of Florida. A lot of these potential losses could be uninsured when we're thinking about the economic ramifications of storms like these.
Yeah, and it's the same with the fires out west. I mean, there's a percentage insured, and I believe the state of Florida has picked up some of this, but there's some point where the system breaks. I don't know when the system breaks, but there's just a point where this doesn't continue.
This is something that FSOC is looking at. The Financial Stability Oversight Council last month had an entire meeting about climate risk and insurance problems. Treasury Secretary Janet Yellen was talking about this.
And John, moving at 18 miles an hour, I think, is a report I saw on other networks. And the bottom line here is it's variable. The hope here is it lands in a rural part of Florida, but I wouldn't count on that. It skirts Tampa is the latest theme.
Well, Tom, as you know well, it's not just the winds, it's the water. As much as 16 feet of seawater could be pushed on shore north of Tampa.
Huge number.
And 6 feet could slosh across Tampa Bay, according to our latest reporting. We'll keep an eye on that for you. As I say, we'll catch up with our meteorologist in about 15 minutes from now. Coming up in the next hour, Margie Vital of Allspring Global Investments as we continue to beat the drum going into payrolls on Friday. From New York City, good morning.
markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
A stable relationship can be of balance for our overall relationship. A stable economic relationship is good for America, good for China, and good for the world. I'm looking forward to our discussion today to discuss some concrete ways that we might be able to work together to accomplish business goals and to bring about a more predictable business environment, a predictable regulatory environment, and a level playing field for American businesses here in Shanghai.
The US Commerce Secretary there, Gina Raimondo, speaking in Shanghai, saying she spent 3 very productive days in China, going on to say, Tom, there's business we can do and there's business to be done. The latest from the Commerce Secretary over in China. That tour, that visit continues through the next 24 hours through Thursday. Let's turn to the equity market just briefly. We're negative here on the S&P 500 after 3 days of gains on the S&P. Yesterday on the S&P 500, biggest one-day pop going back to June. Right. Decent day of gains, Tom, on the equity market. Treasuries rallying really hard in yesterday's session off the back of that job openings figure. Job openings coming in much, much lower than anticipated. Today we bounced back by a couple of basis points, Tom, on a 10-year, 414.32.
It came off the bottom here a number of days ago, up, up, up. We've gone through the moving average that I use. 4544 is my 2 standard deviation move on SPX, and we're there now, and it's been a 3-day vault is how I would put it. Is it a gaff blip? Is it a melt up? No, but it's got some huge oomph to it with this sea change that we saw in jolts.
That data, Tom, fuel for the doves going into September.
Massive.
20th, massive fuel.
I haven't mentioned this yet. The Bloomberg Financial Conditions Index became ever more accommodative off of that. This is going opposite to what I believe we heard in Jackson
And the
Hole.
surprise index starting to roll over just a little bit. Look, this can all change in the next couple of days. We get an ADP report that people say they don't care about. Then they care about it when we get big numbers, Tom. So look out for that later this morning. Then it's claims tomorrow, payrolls on Friday. Let's see where we are on Friday. But so far, so good based on what we heard yesterday, what we saw in the data.
When the facts change, I change. I think everybody feels that way. Of course, Jerome Powell's the one that matters, but I'm sorry, I got a vault to the market up through the moving averages. We'll see what happens today. Right now, futures -6.
Monthly loss, just under 2% on the S&P.
I don't know what the
kind of nothing. I mean, you said that yesterday.
You like this tie? This one's more orange than the
It looks just like the one yesterday.
No, it's
except
different.
it's smaller.
No, it's small.
It's smaller.
This one's more
More
regal,
aligned.
more regal. It's like, you know.
I feel like you've done a better job at that this morning, Tom.
Well, I did. I was sober.
It looks smart.
Joining us right now, Leslie Benjamin joins us, head of U.S. and America's program at Chatham House with a wonderful transatlantic perspective here on where we are. Leslie, I don't know where to begin other than we just observed on television and radio the Secretary of Commerce of the United States of America speaking platitudes, not to demean Gina Raimondo, but platitudes to a stony, silent Chinese audience. What are we doing in China on this 4-day junket?
Well, this is clearly part of an ongoing, very concerted effort by the Biden administration since that secret trip that the CIA director, Bill Burns, took to try and bring back diplomacy to this relationship. You listen to the U.S. Ambassador Nick Burns. He says for the first 15 months that he was in his current position, there was no diplomacy there were no trips, no high-level trips by U.S. officials to China. So, the basic point here is really to get some guardrails around this relationship. And as we move from, Secretary Blinken into the economics focus, it's really a signal that there's got to be some mechanism for restoring and maintaining trade at a time when it's being heavily focused on security, when China's rightfully very concerned, and when there's intense domestic pressure to take a much harder line, at least from Congress.
Dr. Vinjamuri, everyone in your racket has to be respectful of Elizabeth Economy. She is traveling with Raimondo with all of Liz Economy's work on China. And one of her core themes is she is not nearly as entrenched as people think. Is there any fragility you observe to his federal power in Beijing?
There's certainly lots of concern within China about what happens if the economy proves to be as uncertain and unrobust as it's seeming to be relative to past years. So there's plenty of concern there. And from a U.S. perspective, and again, going back to this trip, it's not in the U.S. interest, it's not in the interest of the G7 or the West to have China do poorly. And that's actually quite a hard message to communicate to many people back in the United States and back in the UK. These economies, as we know, are highly integrated. And if you listen to the Commerce Secretary, she said there's only 1% of that volume of US-China trade that's actually affected by the various export controls that the Biden administration is pursuing. So part of this is, clearly to maintain that engagement for the sake of Western economies and especially for the U.S. But it's also to reassure those in China that the aim of the restrictions that are being pursued is not to drive the Chinese economy into the ground at all, but to try and restore the health of that relationship at a time when investor confidence, when U.S.'s businesses are increasingly concerned not only at what they're facing from the U.S., but very much what they're facing from the Chinese government.
So, Leslie, and we've heard this from the Commerce Secretary repeatedly on this visit, this idea that U.S. policy is not aimed at holding China back. You're seeing that messaging being relayed internationally with counterparts in Beijing. And yet at home, you have much more hawkish language, both on the campaign trail in Congress from President Biden himself. How are these two things balanced? Ultimately, the need to go hard on China at home, but try to be friends abroad.
This is very difficult because, unlike all of us who are watching China and can't get as much access as we might like to have, the Chinese Communist Party and the Chinese more generally are watching the debate in the U.S. They can see Mike Gallagher on Fox News saying, why is the U.S. Commerce Secretary in China? She shouldn't be taking this trip. And there's, they've watched the GOP debate. They know that the uncertainty coming down the pipeline from the U.S. is strong. And so this challenge for diplomacy is a domestic one. It's one coming from China. And the broader context, the Biden administration itself is doubling down on its security partnerships in the region. The trilateral partnership with South Korea and Japan, the Quad. All of these things are signals that the Chinese take on board. They don't disaggregate, right? They don't draw this line in the sand between hard power, military security, and economics in the same way that the Biden administration has tried from the start to say that it can cooperate on climate, on healthcare, on science, something that's been thrown up in the air more recently, while competing and taking account of national security. Those are lines that are very difficult to draw and not ones that China sees and interprets in the same way, not least, again, when you've got the House Committee on China taking such a hard line and pushing back so aggressively on the Biden administration's attempts to restore diplomacy.
Hey, Leslie, thank you. Leslie Vinjamuri there of Chatham House on the relationship between China and the United States. This story here I find really, really interesting. The surprise launch of a sophisticated $900 plus Huawei Technologies smartphone, Tom, over in China, happening just weeks before we're going to get a launch potentially of the new iPhone, Tom, in the middle of September. How that battle plays out within China, how to get the attention of the Chinese consumer, how Apple competes in the months to come with this as a political backdrop. Fascinating.
Yeah, I don't disagree with that assessment at all. And also folding into this would be Samsung. And I would say, the little bit I read about it with the great work of Mark Gurman here at Bloomberg is Samsung is back on their heels. So maybe Huawei comes in and really puts the pressure on the Koreans as well. I think we're going to take time here. One of the great advantages of working every day with John Farrow is I learned about strange European stuff I never knew. To bring it into American
what an
focus,
endorsement.
thank you. To bring it into American focus, I want you to think about Aaron Judge or Ohtani of the Angels done at 28. John, you lived this with AC Milan. And this guy, Marco Van Basten, was absolutely extraordinary, wasn't he?
Oh, legend. Why are we talking about Marco?
Because today was Super Cup anniversary or something.
Oh,
when
very
AC
cool.
Milan
Okay.
won the Super Cup.
So I've got 20 seconds to tell the history.
The 20 seconds here.
Okay.
This is the greatest guy since time began.
Mid-80s, Silvio Berlusconi buys the club, acquires 3 Dutch players, the Dutch trio, Frank Rijkaard, Ruud Gullit, this guy, Marco Van Basten. This guy, one of the best to ever do it. Retired early, some because of injuries at 28. 3-time Ballon d'Or winner, Marco Van Basten.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
On the next episode of The Circuit.
And I've heard you say you were really motivated by the fact that a lot of people didn't think you could do this.
I think even today I'm underestimated. And I think even today Bumble is underestimated in terms of what we can be and what we can do in the world.
Watch The Circuit now on Fire TV channels.
Let's get to the price action for you following the biggest one-day pop on the S&P 500 since June. since May on the Nasdaq. The Nasdaq this morning negative by 0.2%. On the S&P 500, we're negative by 0.1. I'll get you a hurricane update just briefly in just a moment, but let's get through the price action first. On the bond market, 2-year, 10-year, 30-year, 2-year, 6 consecutive sessions of closing above 5%. Broke yesterday. The 2-year aggressively lower, yields down off the back of job openings in America, aggressively down on the previous month. Your 2-year right now higher by a couple of basis points, but only back to 491.29. Now, if the data in the United States so far closes the door on a hike from the Federal Reserve on September 20th, does the data out of Europe open the door for an interest rate hike a little bit later? Let's talk about the FX market. The euro just a touch stronger today, 108.84. We're positive there by 0.04%. Under surveillance this morning, the busy week of data continues in the labour market. ADP job numbers due out 8:15 Eastern Time, 1 hour and 45 minutes away, Tom. Off the back, of course, of those numbers yesterday, job openings declining to the lowest figure, TK, since early 21.
I don't know what to do with ADP. I know it's redone, it's rejiggered, it's off payrolls right now as well. And maybe I'm going to look at second look of GDP and the core PCE statistic that comes out as well. Those are all at 8:30. There's it's a nonstop data flow here into Friday when you're not working.
Just dropping that one in.
Just dropping that one in.
Let me squeeze this one in as well. German CPI out a little bit later. That coming in about 1 hour and 30 minutes time. The regional figures popping a little bit higher. We were looking for a year-over-year move lower. Tom, the regional figures we've had so far indicating maybe an upside surprise on Germany after Spanish inflation accelerated for a second straight month going into September 14th in the ECB meeting.
My focus from a distance, I didn't get to bring this up enough at Jackson Hole, is this word Eurosclerosis. Are we done? Have they reached beyond that? Are they to a better unemployment regime in Europe than they were before? And I just wonder the mix of European data out 2 years, 3 years, to me, it's a complete mystery.
And Tom, I wanted to finish on this. We're following this story in great detail over the last 24 hours and will be no doubt for the next few days as well. Tom, officials upgrading Hurricane Idalia to a Category 4 storm. Winds topping 120 miles per hour as it approaches Florida this morning.
There was Camille of 1969, there was Hugo of 1989, and with historical perspective of where we are off the coast of Western Florida, our wonderful Rob Carolyn, he is the king of non-hysteria. He doesn't stand in the water in stupid boots and tell us what's going on. He just looks at what the weather technology says. Rob, what do the scopes say this morning?
Well, the storm's going to make landfall within the next half an hour to 45 minutes, Tom, just northwest of Cedar Key in the Appalachia Bay area of the Big Bend. It's going to go in with winds probably over 130 miles an hour as a moderate to strong Category 4 hurricane. Puts it on the same scale of Hugo. The difference is this is a much smaller, compact storm than Hugo. The hurricane force winds only extend 25 miles out from the center of circulation. In fact, I'm looking at data right now. Apalachicola is seeing winds of about 35 miles an hour at times. Looking at the winds at Perry, Florida, about 35 miles an hour. So you're seeing tropical storm force winds on either side of the outside of the storm, but it's near the eye. That's where the strongest winds are. They extend about 50 miles out from the center of circulation. And where it's going to go inland in that Big Bend area, looks like it's going to go in. There's a big national wildlife preserve, so it's not a heavily populated area. It's going to have a storm surge of about 10 to 15 feet. Since it's a small hurricane, it will start to weaken fairly rapidly, and the threat will move from winds of over 130 miles an hour and a 10 to 15-foot storm surge to rainfall of 4 to 8 inches over northern Florida, southern Georgia. We worry about flash flooding later today, also the potential for isolated tornadoes across North Florida into southern Georgia, and then heavy rains later this afternoon and tonight into tomorrow for the eastern Carolinas.
Rob, you draw a distinction between power and size. The power is comparable to Hugo. Can you just tell us how the size compares to recent hurricanes? Is this something we're used to in Florida?
Well, this is one of what's going to be 15 storms that have been a Category 4 or 5 to strike the Florida Peninsula since the 1850s. So they have seen storms like this. In regards to, let's say, Ian last year, which hit Fort Myers, this is a smaller storm. So even though it's a little bit weaker, Because it's smaller, it's going to fall apart more quickly. So the damage from the wind and the storm surge won't extend as far inland as what we saw with Ian. We had big problems with Ian into southwestern Florida. This will drop off much more quickly, the winds, and the threat then becomes heavy rain for northern Florida and southern Georgia.
Rob, off your remit, you are the weather pro. How do you respond to our insatiable desire to keep building in the path of hurricanes? I mean, when do we wake up?
I don't know, Tom, if we ever do wake up, because people love that view of getting up in the morning, looking out the window and seeing the ocean. You and I discussed this yesterday, and I think the big problem becomes the insurance companies. How much more of these storms are they going to be able to handle on their books? When they stop insuring these buildings, that's when they're going to stop getting built. And I think we're starting to reach that tipping point now.
Rob, thank you for the update. No doubt we'll touch base with you a little bit later. Rob Carradine there of Bloomberg on Hurricane Idalia heading towards the coast of Florida this morning. Katie, this is precisely what you talked about in the last 30 minutes.
Yeah, the idea that if you can get insurance, it's becoming prohibitively expensive because insurers have to pay out so much to cover the damages as we see increasingly catastrophic events, not just hurricanes, but other natural disasters as well, the fires we have seen this year, or there just is gaps in coverage entirely. People just cannot get insurance, and that's exactly what Rob was alluding to there.
We'll continue to cover that with our great team led by Brian K. Sullivan out of Boston. Conrad Quadros joins now, Senior Economic Advisor at Bain Capital. Conrad, I saw a boom moment yesterday. I saw a shift in labor. Are you willing to say that the vector of the JOLTS survey indicates finally non-farm payrolls coming down?
Good morning, Tom. Yeah, I think that report was a very important one. And in fact, there were two reports in the labor market that gave us important readings. One was that drop in job openings, which suggests that the labor market is still tight, but we're starting to ease off the extremely tight levels that we've seen in the last several months. And also consumers' perceptions of the labor market with a drop in the perceived strength of the labor market in the Conference Board report. Both of those suggest some of the steam coming out of the labor market. I don't think that the jobs report on Friday is going to suggest that the labor market is softening materially, but I think we're slowly starting to see some of the excess demand for labor ease, and I think that the Fed's got to be quite encouraged by that.
We have a PCE statistic buried in all the data today as we dash to Friday. What is disinflation doing right now?
Well, on the PCE report that we're going to get today, obviously that's a little bit old news because it's just a revision for the second quarter. But then tomorrow we're going to get the numbers for July, which are a little bit more up to date. So what we're seeing, and interestingly, I think you talked earlier about European year-over-year inflation rates, and when it comes to the core PCE deflator tomorrow, the more up-to-date number, we might see that tick up a bit. And you'd mentioned that in some of the European numbers, we're seeing a tick up there. Headline inflation rates are probably going to tick up for a month or two because of what's going on with energy prices and gasoline. But if we look at some of the underlying measures that we've focused on, we are seeing some better momentum in terms of easing. We're clearly nowhere near where the Fed wants us to be on inflation, but momentum is easing. And the breadth of price gains, if we look at those components of PCE prices, the number of those components that are rising at very rapid rates has started to come down as well. So some encouraging signs there, but I think overall the inflation rate's obviously still too high. Progress there. The labor market's still too tight, but we are seeing progress on both fronts.
It's just a question, Conrad, of how much progress is going to be sufficient for this Federal Reserve. How many months of data like what we saw yesterday do you think they need to see?
Well, they've made it clear that 1 or 2 months is not enough. But what we have seen is enough information for them to give give it a chance for the past increases in policy rates to start to do their work. And so we've been of the view that the Fed is likely to hold rates steady. Of course, that's where the market is also. And the Fed is signaling that they might think they need to raise rates one more time. My feeling is that the Fed is probably done here, and that if directionally we continue to see inflation rates come down, we continue to see the excess demand of the labor market ease, the Fed is likely to let past increases in policy do their work, they're likely to let the lags have their impact. And I think we might be done here on Fed rate hikes.
Okay, so if they're done and the lagged effects are going to start kicking in, once they've done so, do you think it's going to be revealed that the Fed already did too much, even if they call time now?
I do not, because we were, if you take a step back, we started worrying about inflation back in 2020, and we pushed back very strongly on the 2021 transitory narrative. And we thought that the Fed was way too slow in terms of hiking rates. And one of the things I talked about, momentum and breadth, those are the things that we focused on. And in terms of policy, we're all looking at these economic data releases, and an important one that is sort of under the wire is the Laubach-Williams update that we're going to get tomorrow. It's difficult to determine how tight policy is, but that equilibrium rate that we're going to get from Laubach-Williams is one way the Fed's going to do it. The way that we've done it, because we're not a big fan of those models of equilibrium rates, is we look at real policy rates. And the real policy rate is now positive, but it's not significantly positive. We're looking at a real Fed funds rate somewhere around 2%, which is not particularly tight. I think it's enough to give us forward momentum towards what the Fed is trying to achieve, but it's not too tight. Now you look at Europe, and policy rates are still very negative. So that's the area where I think there's still more work to be done.
Conrad, the heart of writing De Quadros economics is if rates go up, OMG, we'll all survive. Revisit that. If we go back to a writing De Quadros rate regime, as you've predicted for decades, we go on. Life goes on, right?
I think so. And I think what gets missed in all of the discussion of the impact of higher rates on the economy is getting back to that natural rate of interest. If the natural rate of interest, or the rate of interest that provides some restraint on the economy, that puts downward pressure on inflation, if that has moved up also, then a lot of what the Fed has done here is just sort of kept up with the rising natural rate of interest. And I think you could make the case, and I think that eventually the Fed will start to make the case, that the natural rate of interest has moved up. We have productivity growth that was half